Just keep an eye on this prior low over here. From yesterday, we were looking for a trend to develop to the upside into the weekend. So we got some more data coming out this morning. We've got at 10 a.m. The main data that you want to be watching for is ISM services, PMI. Factory orders matter too at 10 a.m. Then we've got a bunch of other stuff too, ISM stuff. But the biggest one that you want to be watching at 10 is ISM services. And then don't forget on Friday at 8:30 we've got non-farms and the unemployment rate. So you may see a little bit of you should either be positioned at this point, or you'll notice that traders will be taking a step back until all of this data comes out. The big takeaway from this is you should already be positioned in the early week for your what you think is the outcome into Friday. Otherwise, it is easy to get trapped and get taken down to the cleaners here or get blasted out. As you know, whenever we come into PCE, NFP, any of that kind of stuff, or weeks closing out the week with major data, traders tend to place their trades or exit the market and allow that data to come out to take the reactive trade. So you'll notice that the Discord and the chats this morning will probably be kind of light until all of that stuff comes out. Otherwise, just pay attention to this trend. Are we trending up still? Or are we breaking this trend, switching trend at any point to the downside with new lows? We'll take it from there and see what happens. Otherwise, I'll be on later this morning. I was up late last night. I was I think my first brief I wrote, I ended up deleting text boxes last night. Had to go back in and get them done. So I didn't get to bed last night. I don't think I was done until quite late last night. So I'll be back on here in just a little bit. Don't make any rash decisions again until it's 9:42. Don't be making any rash decisions. Don't be like, oh yeah, market's gonna squeeze, and then you get a data release that's major at 10, and they blast your ass down and go up, or they blast your ass down, get a new low and a new low, and they blast you down. You should already be long up here or short from up here, and you're just waiting on that data to get paid. With some continuation into tomorrow, right? We've got NFP unemployment tomorrow. Those are pretty big data points, and you're going to see the market move off that stuff more than likely. Also, this morning, if you read the brief last night, we've got like a culmination trade going on in the background. I'm not going to talk about it here on the show, mostly because I don't really like to talk about that stuff or rehash that stuff or spread that stuff. As it, it's like you should know about it, how it relates to the market, and I think that's about it. But you should read the last night's brief. Take a look through that so that you have some awareness of what's going on out there in the world, that kind of stuff, and how it impacts markets. Other than that, I'll be on in just a little bit and drink some more coffee and try to kiss my wife here for a minute and make some plans with her for the weekend. She hasn't seen me much this past week. I've been working my balls off in the market. I'll stay back with you guys in just a little bit. Also, one other thing. Today and tomorrow, as this data comes out, try to remember to check back in at the end of the day with Wolf Richter. and see what he has to say on this data that's coming out over the weekend. And more importantly, we have next week some pretty big points coming. We've got meeting minutes. We've got CPI and a few other heavy hitters. Like I think Wednesday, Thursday data is like all day long. There's just like tons of stuff coming out. So you'll be wanting to prep yourself on what to expect into next week with that heavy data. It's kind of why September, October can also be known as like September, October. It's usually at this point where we get some major Fed rate decision stuff, and we are pretty data heavy heading into Q4. I was talking with a friend last night about an old friend of mine was asking me where I was in the market, and I was talking to him because I talked to Joe Donut yesterday, and we were both discussing. So I own businesses, and Joe Donut owns businesses, and then I'm in the market. I have exposure to the market, and some of you have more exposure in the market. You know, more than zero dates, of course. Like you own the underlying, I own the underlying. I don't own the underlying right now, but I do own some other crap that's been in my brokerage all year long. That I want these like M&A trades and meme stocks and stuff like that, spec growth that I haven't produced. But everybody's shifting to Q4, which is a time of the year if you're not just trading like zero dates or I don't know, like limited exposure to the market. It's a lot of people, including myself, are shifting gears towards end of year stuff, right? Wrapping up trading, sweeping the floor kind of stuff. I've got like quarterly tax stuff. And then I've got Q4 stuff for my businesses where I'm wrapping up the year, looking forward towards paying taxes in April. So I'll go into some of this like tax loss harvesting stuff once this quarter opens and we have a down day or two. But just realize out there that there are a lot of people that are have stuff to do as we approach new quarters, and specifically, they're trying to wrap up their years as well, or their full year as well. And they start that work, and I start that work now, particularly because anything beyond now becomes procrastination that will bite you in the ass end of year and in tax time in the springtime. So just be conscious of that as we are rolling into a new quarter. One other note this morning too. If you don't get the market briefs, I do want to update you on this. So keep an eye, particularly this morning. Not so much on Qs or S&P 500. They're a little bit more resistant to this. There's a culmination trade here of some panic going on out there. You could see some weakness. That's a separate trade, and particularly in IWM and DIA. There's like a culmination of fear and panic thing going on out there. And there could be a quick small trade to the downside. The only warning I would give you would be on that trade. It's in the brief from last night, but the only warning I would give you in that trade is it's like its own trade. It's hard to explain. It's like rate cuts. There's real rate cut trade, then there's the gambling rate cut trade. They're two separate independent things. It makes life easier. It's kind of like this past week where the news came out and said, "Oh, the Fed or the market's paring back rate expectations for November, December." And of course, I scratch my head because I'm like, the expectation was always 50 BPS end of year for a full 1 point end of year. So there's like always like two trades going on. So just note that IWM, DIA, Dow Jones Industrial Average, which should be over here somewhere, was over here, so right here. IWM, DIA. You could see more doom inside of those two indexes in particular. And people will try to assign this to, let's say, port strikes, but it is not port strikes. And I want to explain this to you. If you're a younger participant in the stank market here, if we go to war, now I don't want to spread any doom or anything like that, but if you are a student of the stock market, an astute student of the stock market, and have any kind of time in the stock market, if there's potential for war, I'm going to talk to you. I'm just going to give you a quick synopsis here. If there's potential for war in the world, not necessarily World War III, but war, there are some mechanics that take place and also prep in the background in the market. The first thing you'll see oftentimes is a rise in the U.S. dollar. Forget about gold. Forget about Bitcoin. It's a rise in the U.S. dollar is the one you want to be watching historically. And you can see that rise in Dixie. You'll hear people talk about the USD JPY trade. So I want you guys to know that Japan does not wag the United States. The United States wags Japan. Now, if there's no news out there and Dixie is on the rise for economic reasons, Japan can come into focus in their policy and matter. I want you to realize that the USD JPY trade is important. I know that Japan's making decisions, but what the driver of all of this rise in Dixie is warfare, like WARFEAR. This is pricing in the possibility of war, even though it isn't priced into SPY and Qs. That's what this is right here. Okay, I want you to know that. And that's why you'll see like people out there saying, oh, it's the USD and Japan policy. It really is not. This is behind the scenes pricing in the possibility of war. Another thing here would be the strength in oil, because if war were to break out, there is pre-positioning in oil as well on that potential. The next thing is I don't think there is going to be a World War III or the Mideast gets on fire. But if it did, the largest shocks would take place to, guess what? Typically, it's the Dow Jones Industrial Average and also IWM due to shortages related to that, not port strikes. You got to understand if war broke out, the ports would be seized by the federal government. If you're older, you know this already. Because there are examples of this in the past. And then as a matter of fact, if war broke out, the two indexes that would be most affected in a drop would be, in particular, would be the Dow Jones Industrial Average. Now there would be a bounce and then a re-entry and buy and a dip buy in defensive industries and stocks. In sectors. So just note that, like, here's a prime example, right? This is QQQ right here, right? I'm going to show you a prime example of this so that you can see through the bullshit that's spun. Here's Qs, right? So tech has been net sold for 5 straight weeks. Some parts of tech have not, but you see how it's basing here? And it's not experiencing any kind of like major weakness, where when you look at the Dow Jones Industrial Average, do you see how it's counter to that right now? See the weakness here in DIA, this blood right here. You might be wondering, like, well, if DIA is down, why is Q's not down? It's not some Guido from I shouldn't have said that, but it's not some fake, or sorry, it's not fake. It's not because some fake mafia guy. This is behind the scenes, actions taking place by Wall Street, hedging against a potential expansion of war with Iran and Israel at the moment. So just notice this stuff and what's really driving divergence in the market on a macro basis. Get it? If you don't, this week in particular, when we did the market brief on Sunday for you, this week in particular, if you're a younger trader, if you're like 40, 30, 20, and you don't have a lot of experience with wartime as an adult, maybe you were 20 years old or younger, and you want to learn how to identify warfare and stuff, war like WAR, and then a separate word, FEAR, and how the market hedges against it. There's some great mechanics the past week, 2 weeks, somewhere in there, going on in the background. And if you do get the brief, take a read through it, because there are some ways to trade this that are presented from some different perspectives. I'll be back with you guys soon. Yeah, my camera is off because I'm not here for a bit. I will be on the show in just a little bit. I'm just here chatting really quick as I got the show up for you guys. I'm going to drink coffee with my wife for a few minutes. I got to talk to her. I haven't seen my wife all week, so I've been working pretty much like 4 in the morning, then 6, then 8:30, and then the show. And then I'm working until like 2 in the morning. It's Thursday. I gotta touch base with her because the weekend is coming up with the kids and all that kind of stuff. So I just need a few minutes. I'm gonna have a cup of coffee with her and do some chatting. Thanks, guys. Also, one last thing. I said this earlier. I'm gonna say it again. You'll notice futures traders, Globex traders, pro traders will wait for all of the data releases over today and tomorrow, and then you'll see them come out and be a little bit more active after all that stuff comes out with direction of market. You should have earlier in the week placed your trades at this point and have your convictions for the direction of the market. Now it's just a matter of the payoff or a shift in your thesis at this point. So the only people trading in here right now are likely people that either are not aware of this or they are in danger without knowing it. That's quite easy from pretty much right now into like 1:30 this afternoon. There could be some major moves, and then tomorrow morning there could be some major moves. So you kind of this is kind of one of those weeks where you should have already had your convictions made and be positioned, or you should be stepped out of the way due to volatility. I showed you guys twice this week the SPX vol surface, and you all should be very aware that regardless of data, that the vol curve spikes into today and does not let up until about 9:30 tomorrow. So when you see these vol curves right here, a lot of traders are like, I placed my bet. My bet is in, and I will see you on this end over here, right? And they will also sometimes pop in over here. Now, this vol curve doesn't imply direction of price. It just tells you that expect volatility, right? So if you see traders in here trading, it's okay to trade in here in this part with other issues or symbols and stuff like that. Just note that a lot of the markets is, a lot of chatter in here, a lot of chatter in here, and a lot of observation in here as that spike takes place on Thursday and Friday, where there's more trading activity here, and maybe some shifting of positioning as we make that turn there. Make sense? If it doesn't, we'll talk about it later today. Then you get savages like Hey Lou. That's me too. I like trading this stuff. Like I love personally being in the middle of vol. I'm with you, Hey Lou. Personally, I love it. So, but a lot of other traders, they just sit on their hands at this point and watch as the market unfolds. And as a matter of fact, saying that you can see right now that as we approach 10 a.m., notice how everything's turning black here. This shows you that risk is coming off the market as some data is being released here. It's like if you're a futures and Globex trader, there's like some traps as you come into this kind of stuff. And, like hindsight trading, especially as a futures trader, there's a lot of risk. Futures traders like layups. They like easy trading, right? Or they love to trade after an event or after data because you can get trapped in here up or down, right? They blast your ass if you're short or you're long and they dump you down here and you get the pain trade, right? You get kicked out of your trade, lick your wounds. And if you had just like sat here as a Globex trader or sat here, you could have traded the reversal. You could have traded the reversal. Just nice, easy layups, right? Just nice, easy layups. All right, back with you guys in just a minute. Just a note, I switched over the soundboard. The news squawker is on. I've got the news squawker from Europe on and Financial Juice.
Of note for PBR Petrobras, it has signed a deal to supply ternium with nat gas in Rio de Janeiro, according to a statement. Middle Eastern geopolitics. According to IRNA, the US has indirectly told Iran not to attack its Middle East bases. That's according to IRNA, being cited by Newswise.
Biden says we are discussing Israel striking Iran oil facilities. Seeing downside in the S&P, upside in WTI after that headline.
Protect your trades from macro headline risk with Financial Juice Pro. Now only $99 a year for our real-time service.
oil futures jumped more than 5% on Israel-Iran conflict.
And on the geopolitical front, US President Biden says they are discussing Israel striking Iran all facilities. That's US President Biden, according to Bloomberg, says US is discussing Israel striking Iran all facilities. And just noting immediate reaction, we're seeing some upside here in crude futures here on this news from Bloomberg. US discussing Israel striking Iran all facilities.
At 10:30 a.m. Eastern Time, we get our weekly EIA natural gas change. Forecast a build of 57 BCF on the prior build of 47 BCF.
Hey, I'll put WTI up for you guys. Woo! Look at that WTI trade, baby.
Behind that latest Bloomberg headline in the write-up,
We we had that pullback.
if he would support Israel striking Iran's oil facilities, and his response is, quote, "We are discussing that." So it's just worth keeping that context in mind. We have seen the knee-jerk just pare back somewhat in crude futures here, but Brent still trading above 77.
So this is down here is WTI, if you guys remember. Oh yeah, baby. Look at that WTI trade right there. I mean, we charted this out. Hold on. You guys, I'll post in the Discord for you.
So just a reminder, at 10:30 a.m. Eastern Time, we have the EIA natural gas change BCF. Forecast is for a build to 57 BCF, prior 47 BCF.
Ten minutes now to the bottom of the hour, and we will get the weekly EIA nat gas storage change for the week of 27th September. Consensus looks for a build of 57 BCF versus last week's build of 47.
One minute
And just
remaining.
note for RUM Rumble, it does say it will be streaming live with President Donald Trump at 9:30 Eastern Time, 9th of October, and that will be exclusively on Rumble.
10 seconds. Build 55 BCF, build 55 BCF, lower than the expected build of 57 BCF. And at 10:40 a.m. Eastern Time, we expect comments from Fed's Kashkari, who moderates a discussion with Fed's Bostic on an inclusive economy at an event at the Minneapolis Fed. No text is expected, but there will be a Q&A.
Around a minute now to the bottom of the hour. We'll be on the lookout for the EIA nat gas storage change for the week of 27th September. Build 57 expected. 10 seconds. That's a build of 55, slightly smaller than the expected build of 57. EIA nat gas storage change for the week of 27th
At
September,
10:40
build
a.m. Eastern
55
time, we expect
versus an
comments from
expected build
Fed's Cash
of
Kari, who moderates a
57.
discussion with Fed's Bostic on an inclusive economy at an event at the Minneapolis Fed. No text is expected, but there will be a Q&A.
And European banking news, HSBALN. HSBC is reportedly scrapping some internal events and is restricting travel to cut costs, according to Bloomberg. And folks, in around 10 minutes' time, we are due to get another wave of Fed speak. Fed's Bostic, 2024 voter, and Fed's Kashkari, who votes in 2026. They're going to be speaking, but I'm not sure we get much by way of monetary policy. They'll be speaking at a Frontier Research to Enhance Economic Opportunity event. There isn't going to be any text, so not really sure we're going to get too much by way of Monpol.
Shortly expecting comments from Fed's Kashkari and Fed's Bostic.
No for MSFT Microsoft. Microsoft gives its Edge web browser an unfair advantage according to rival browsers. According to Reuters, EU antitrust regulators should subject Edge to tough rules according to rivals. And for the Mexican peso watchers, the new president, Sheinbaum, says she will be seeking a minimum wage increase of around 12% for next year. Bit of energy news. Valero McKee Texas refinery has reported emissions from the FCCU stack vent V20.
So according to an analyst, a news reporter on X, saying that Biden was asked whether he would support Israel striking Iran's oil facilities. He said that we're discussing that, and I think that would be a little anyway. And he left it there and moved to the next question, adding, "Nothing will happen today." Nothing that's so no other detail that's been provided from that tweet that's been put out. Again, Biden was asked whether he would support Israel striking Iran's oil facilities and said, "We're discussing that. I think that would be a little anyway." And then he left it there and moved on to the next question, adding that nothing will happen today.
Economic commentary from STZ Constellation Brands executive on call says consumers are seeking more value-orientated packs and channels to manage their spend. We have around 10 minutes now to the top of the hour. Around the top of the hour, the Treasury will be making its supply announcement for next week's 3s, 10s and 30s. Consensus expects those sizes to be left unchanged at 58, 39 and 22 billion respectively. Of note for BMY, Bristol Myers Squibb, the FDA has approved nivolumab for resectable non-small cell lung cancer. And a bit more from STZ Constellation. Exec says they're expecting sequentially lower operating margins in the second half of this year.
OPEC September oil output falls by 390,000 barrels per day from August, 26.14 million barrels per day, led by Libyan losses, according to a survey. So, a release from the IMF, the spokesperson says Japan's economy continues to grow and inflation is on track to return to 2% target. And the spokesperson says the fund is closely monitoring the escalation of the Middle East conflict with grave concern. And they say the US Federal Reserve should continue a data-dependent and meeting-by-meeting approach to monetary policy easing. And further escalation of conflict heightens the risk and uncertainty and could have significant economic ramifications for the region and beyond. So the US to sell $81 billion in 3-month bills on October 7th to settle on October 10th, and to sell $72 billion in 6-month bills on October 7th to settle on October 10th. So the IMF notes that the US Fed is acting in an appropriate manner. And the spokesperson says Japan's fiscal policy should focus on growth-friendly consolidation to help rebuild fiscal buffers and ensure debt sustainability. So the US to sell $58 billion in 3-year notes on October 8th to settle on October 15th. And the US to sell $22 billion in reopened 30-year bonds on October 10th to settle on October 15th, and to sell $39 billion reopened 10-year notes on October 9th to settle on October 15th. So the S&P 500 is down 0.3%, the Dow down 0.5%, and the Nasdaq has turned negative, last down 0.2%. Bostic says the natural unemployment rate has shifted and it could be lower.
And just making you aware, seeing some comments here from Fed's Bostich. It does note natural unemployment rate has shifted and could be lower. And separately on the EMFX footing, just seeing some comments from a CBRT governor. Does note September inflation data from the Statistical Institute was well above expectations and upward risks to inflation are clear.
Fed bids for 4-week bills totaled $294.7 million.
And just one to be aware of here, according to Reuters citing sources, online retailer Shein is set to hold informal investor meetings in coming weeks for its planned London listing. Of note here for healthcare names such as Eli Lilly, LLY, CVS Healthcare, CVS, and Cigna, CI. Texas Attorney General does sue Eli Lilly, Express Scripts, CVS Pharmacy, and others over insulin prices conspiracy.
At 11:30 a.m. Eastern Time, the US sells $95 billion in 4-week bills, prior high yield 4.7%, and a prior bid cover of 2.81. It's 11:30 a.m. Eastern Time. The US sells $95 billion in 4-week bills. Prior high yield 4.7% and a prior bid cover of 2.81. U.S. Agriculture Secretary Vissack says short labor stoppage at ports should have minimal impact and effect on prices.
Of note here for Helix Energy Solutions, ticker HLX, reportedly exploring options, including a sale. Of note there for Helix Energy Solutions, ticker HLX, reportedly exploring options, including a sale. Again, that's a note there for HLX. And just making you aware, see an immediate spike higher in Helix shares.
Shortly expecting the results of the 4-week bill auction, I'll lead with the high yield. 4.755%, 4.755%, bid to cover ratio 2.5, 2.5. So the US sells $95 billion in 4-week bills and awards 17.69% of bids at high.
Just seeing the latest US bills here. The US does sell 95 billion in 4-week bills at 4.755%, covered 2.5 times, and it sells 90 billion in 8-week bills at 4.655%, covered 2.72 times.
According to RIA News, Russia's deputy foreign minister discussed his situation in Middle East with Israeli envoy to Moscow.
Give me just a few minutes. I'll be on the air.
And just on the geopolitical footing, making you aware that Israeli military says it did intercept a drone in southern Israel. No injuries have been reported.
Pay close attention right here to the SPX Gamma. There's a hourly trigger bar right here. You just want to be see that little green line right there. Just watch out for a back test. Blast up here, pull back. You want to get above this zone to begin to attack.
From Goldman Sachs. Do note they have left their Q3 GDP tracking estimate.
Moon mission. There's like no relevant gamma after this. Give me a second. I'll be on in just a moment.
mortgage rates in the US increased for the first time in 7 weeks. So Freddie Mac 30-year fixed rate mortgage averaged 6.12% as of October 3rd. And they also say that decline mortgage rate stalls due to a mix of escalating geopolitical tensions and a rebound in short-term rates.
And just making you aware, LYV Live Nation Entertainment shares just seeing some downside in recent trade. Not seeing anything behind the move myself, but of course we'll be on the lookout for any headlines related to Live Nation Entertainment. Just making you aware, shares have seen some downside in a recent trade.
Do do do. Do do do. Do do do. All right. So let's have a little. Let's do a little update here. One quick second to get all set up here. Here we go. Old man, be right backy. Hold on here, chat box. Move that over. Okay. So we're gonna have a little talk here. A little bit of an update. So oh, how do I get rid of that? Oh, god damn it. So last night, so what I do is at nighttime, in the evening, I come back to my office. I try to get some time with my family. So market ends, right? And I'll, the first thing that I do after market closes and I turn the stream off is I try to catch up on office work, emails, that kind of stuff. Hold on here. And then just quickly see what, I'll check in on like a post market, like after hours. And then I go and I take care of stuff in my own life that I have to take care of. Family, children, dogs, home stuff. I have another property. I have all kinds of other stuff I got to do, right? Check in with coworkers and people I'm in business with, that kind of stuff. So, and I come, and that personally, I like to wait for about 9 p.m. Asia open, post market ends, after hours ends, and gives them minutes. It gives some time for digestion of the U.S. cash market, and gives time for other markets to open. And for me personally, some of the things that really are important to me is when you're trading day in and day out. This is probably the key takeaway from this is that we drill down, or you might drill down on we have a lot of traders here that trade a 30-second chart, believe it or not, or even a smaller time frame. We've got traders that'll trade just like this move right here. Like literally from here to here, and they're in and they're out, right? When doing that, you get a tunnel vision, right? I think David said this before in the show, and some other traders have been on the show that say this as well. So when you wake up in the morning, the last part of that process, well, you're drilling down in your own whatever market you're trading, and then you kind of like take a step back, and you try to let the market digest, and then do some research for your next day of trading. And maybe like scale out a little bit because of that tunnel vision. In the military, you'd get tunnel vision. When I was in the Army, I don't know who here has been in the military, but when you're in high stress situations, it looks really weird. People's eyes dilate, and everyone's staring at each other. And it's not a look of fear; it's really bizarre. Like your whites of your eyes go away, the color in your eyes goes away, and you just have really dilated, big pupils. It's kind of weird looking. It's not quite crazy looking, but it does look bizarre. And that's very relatable to trading the market. Is that you're down on this finer time frame, and your thought process is stuck in that refined drilling down in price action kind of a thing. So it's good to get away from that, and then take a step back, higher time frames. And even in the morning or whatever session you're trading, to refresh, right? To scale back on a daily basis. Take a look on a 4-hour basis, a 1-hour basis, before drilling back down into those situations. Undilate the pupils a little bit, and get a little bit larger view. So at any rate, the reason I'm saying that is because I usually come back around 9 p.m. I watch the after hours close. I watch the open in Asia, and I start reading, start consuming, start going, man, I don't understand what this guy is saying here. I got to read more of this or read it 3 times. I mean, you never know. Like some of these guys, they talk, and it's at a high level. So then I start to write my nighttime brief. Sometimes I get the brief done early. Sometimes it's late. Sometimes there are events. There was a debate the other night that I had to watch for how it would impact the markets. And what's fascinating is 2 nights ago I had to do that. Last night, then another night, the gamma, the shape of the gamma landscape had finally opened, and that took me time to go down a bunch of different rabbit holes to confirm all this was happening. And then, of course, last night, I'm writing the brief, or yesterday, I'm writing the brief. I met with my wife last night, and people are out there fucking panicking. And it's a multitude of things. There is a lot of you gotta understand this, the layering of this. And it starts with the election. It started with the election. You've got a political system in the U.S. that is now built to turn you on each other, for lack of a better explanation. This level of divisiveness hasn't been seen since mid-1960s to about 1973, if there was a time. But we now have the power of the internet, so it's even more pronounced. And so you're walking into an election where even if people do not want to admit it, people have fears of civil war in our country. And this is everybody. It's a lot of it. You won't believe this, but a lot of it is likely caused from people with motivations to make you feel like that. All of you feel like that. Political money, state power. That state power is our state and other states. And so there's a undercurrent in our society of election fear, civil warfare. They even made a movie about it, right? And then we come into a probable port strike that's under the surface. And then we have a hurricane. And the hurricane left devastation, not in the expected places, but in unexpected places. And that shows America vulnerability in real time for a citizen. They say, wow, we thought it was going to go here and it went there. And now they make up these excuses like 100-year flood, then it was a 500-year flood, then it's a 1,000-year flood. The reality is it doesn't matter. What really matters is that people are then become introspective, and they're like, "Wow, if it could have happened there, it could happen here." So you get this new level of fear, right? It's like new layer, and all along you've got a clown. I'm gonna call him that. This guy's a fucking clown. And I'm actually pro union. That guy does no fucking service for the unions. And I got to come out there and say it. That fucking guy can go fuck himself all day long. And that motherfucker, sorry, I'll stop swearing. That guy is not a fucking American that can go fuck himself. But that guy pisses me off because something else is happening on the side. You have increased tensions between or in the Middle East in general. So you have you have layers of stuff on top, and then you've got this fucking schmuck that's fanning the flames. And that is another background thing that you shouldn't worry about, but he's pouring gasoline on all of this. What's fascinating about this, too, is if war broke out between Israel and Iran, the ports would be taken over in the United States, and that strike would be immediately broken. So that guy is doing no services to unions, to our nation, or not stoking fear. My wife went out to a big box store to get our normal like body wash and all that kind of stuff last night. And I asked her when she got home if there was, like empty shelves and any of that kind of stuff. And she said that she's like, they had pallets of shit everywhere. So I had her read this Reddit article. And here's where it's insidious. Our own retail stores are more than willing to feed that panic. And that I find disgusting as well. They're as complicit. And especially when they're putting out pallets of this shit. I get that the idea would be we have to do it because people want it, but they could keep that shit out back and refill the shelves as they become emptied. Or just run out. But there's like greed at play here too, right? And all along, the toilet paper company doesn't give a flying fuck. It's all made in the U.S., and they have no problems feeding your fear. And it's like everywhere. Our media is the same way. They like to feed the flames too. It's like this whole fucking mess of turning you guys, not just on each other, but walking down the street shaking. And it's not right. It's not cool. It was not always like that in this country. There have been times like that, though. It made me think about. It made me think about. It made me think about. The War of the Worlds broadcast, and how some people panicked. And I know that most of you out there at some point said, "How did those people panic? They must have been just like, I don't know, stupider back then or something." And we're doing the same fucking thing. So that is a concern. If there's like some real volatility out there, it's probably an escalation of war. The reality is not the port strikes. There's no Civil War bullshit. Like we got smoldering Civil War. And they got World War III with Ukraine and Russia. So you got China threatening Taiwan. So like all this stuff, your regular everyday American probably has some background worries going on. And then you've got people feeding into all of that fear. So people are nervous. That's what they are. Whether you may be or you may not be, but I assure you that that is happening across the U.S. So, and I find it disturbing, to be honest with you, because none of that's really happened yet, has it? We don't have shortages. The port strike could be fixed at any moment. There could be a peace negotiation announced at any moment. And I want you to think about me saying all of this stuff to you because the market is resilient. we've had a lot of potentially negative data as well that should have come out this week to this point that should have dropped the market. We have expected vol coming into the market, peaking today and tomorrow morning. Volatility does not translate to down markets. And you should be aware, of course, of risk in market and risk in your own life. But to panic over it it does no service to anyone. And our country is not about that. It has never been about that. Resilience is our nation. The rest of the world looks towards us for that too. In World War II, the first and only case of an atomic or nuclear weapon being used was used by the only country that had access to it. We could have ran the world, and we chose not to. We could have stopped research in any other foreign country, and we chose not to. And we are now looked at because of that to this day as the leader of the free world. That's a fact. So please uphold that as an American in our country. We are looked towards not as panickers. There's not the United States of America. At any rate, what does this lead into? It's okay for you to be aware of this stuff. Don't let it consume your life. Please don't. You just get on with living. If something bad happens, we are resilient. We will deal with it when it comes. And further from that, keep in mind that all of this volatility will pass. And no one wants to think about that volatility passing. If they wrap all of this volatility up in a package and you're still in doom mode, the market is literally going to go straight up, vertical, on that vol, leaving our economy or our politics. We have an election that's going to be wrapped up here November 5th. Maybe it extends into the 15th. That's a lot of stuff going on right now. And if that stuff wraps up, this market should unwind and explode to the upside. Now, I want you to think about the fact that the market has not yet crashed either on all of this perceived volatility. I want you to think about the fact that Jerome Powell came out and announced rate cuts. And on that positivity, the market moved higher. And a ton, whether they want to admit it or not, a ton of money came into this market. And it's gone nowhere. And nothing has shaken the resolve or the resilience of that money at this point. And you would think that with all of this noise that we'd be down here right now. And I know a lot of you out there, not maybe here watching this show, but I know that a lot of you out there are reading stuff out there from people pushing that doom. Now, if something really bad happens, we can see that immediate drop. But you're not going to get it unless that actually happens. No one cares about the union boss. He ain't sending the market down to zero now. It ain't happening. We had Joe Donut on the show. He talked to you directly about retailers that between Q2 and Q3, they already had their orders in for the year into, believe it or not, the beginning of 2025 and have deliveries already being delivered. They have warehouses full of shit. You're not going to see any kind of like damage or doom for weeks, if not months. And if anything, the immediate reaction is going to be these retailers making bank off of this. They're literally making bank. If you're a toilet paper dealer, you're like, woo, I'm making bank right now on the plebs' fear. Now, support is being held here. This is really all you need right here to know.
Resistance in Iraq says it attacked target in South Israel, according to a statement.
Support is being held. Demand is right here. Until that demand is lost, the way is higher. If this demand goes away, we'll start to talk about downside targets. We talked about this earlier in the week. And I want to show you this again right now if I can. I want to go back over to a similar example. Now we have 2012. I've already shown you that like 20 times. I've posted the links to 2012, which shockingly, not shockingly, is very similar to this year. You got QE3 in the OPEC or the QUAPEX roll between September and October. You had QE3. You had a midterm election. You had a potential war, believe it or not, in 2012 between Iran and Iraq that year. Very similar circumstances. I mean, almost too similar.
And just so you're aware, on the ground.
And even through all of that, the market, they had a playbook, and they had this playbook, and they had to pull down, and then they went up and at the end of the year. And the pullback because of QE3 wasn't as heightened or pronounced to the downside. We have another similarity or similar time to that, which was just this year. We all forget that there was an expected rate cut in the spring. And it was the end of a quarter, right? So we got the end of the quarter right here. Bam, bam. And we had a day off. That Friday, we were closed. Closed that Friday, right? And we had what? Quarterly OPEX came in on a Monday. So you had a couple days off before that, right? So there's some similarities in a similar playbook. And remember, as you come into the first week of the first quarter, we've already talked about this, very similar to 2012. We consolidate and we break down or we break up and away, right? And you start to see those gamma walls open up to the up and down side as the week ends. Now, today is Thursday, right? Here's your first week right here. Here's your first week. And what I want to show you is this. That right there is about 1 o'clock in the afternoon on that Thursday. I want you to look at that. And they blasted it down again to the daily trigger and then brought it back up for that weekend unemployment and NFP. So these are dealers that are dealing with vol, right? Not letting the market get out of control and roping it in until we actually make a breakdown or up. Now, in this case, in 24, we didn't get the rate cut, did we? With no rate cut, they sent us down just above the weekly trigger. And we got a rate cut. In the 2012 example, that rate cut actually led to less down and a move higher into the end of the year. So a little bit less damage. So I don't mean to tell you that at 1 p.m. today, the market's going to roll down because history doesn't always repeat exactly. But when I tell you that time is of the essence here, I mean it. Why do I mean it? Because even though events haven't taken place yet, that's 1 o'clock, right? Even though, hold on here, 16. Even though time hasn't taken place yet, or excuse me, even though we haven't realized war in the Middle East or anything like that, this is PCE tomorrow, or non-farm payroll and unemployment over here. You would expect people to do two things. First off,
Where the Islamic resistance in Iraq says it attacked a target in South.
they don't want to go into the weekend if there's no resolve in the Middle East and be exposed to the downside. There's just no reason to.
The Israeli military.
There are better days to trade. Nobody wants to go into.
Note for Tesla, TSLA, the Tesla
Turn this off. Hold on here.
Voice news
is said to be
disconnected.
leaving the company, according to Bloomberg.
Hold on here. So number one, you have volatility on a geopolitical front. So nobody is going to want to be long over here. You wrap it up, you got unemployment and you got NFP tomorrow. Number two, circling back to what I just told you about writing market briefs at nighttime. I walked into every night I sit down at my desk and I walk into, figuratively, I walk into the Discord and I hang out in the market chat as I write my brief. And last night I was asked, hey, where's everybody in the pro chat? And why is nobody in the market chat? And these are like new members, new community members, stuff like that. And so I was talking with them and I said, there's a lot going on right now. We have the SPX vol curve is literally just like this. I think that's Friday close. Yep. So we got the vol curve coming through during this time period. So there's a lot of danger in here, or not danger per se for crash or anything, but there's a lot of volatility. Bam, 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 bam. All along while dealers are trying to keep us reined in if nothing actually happens. And so a trader or investor with more time in market, they have a rule. Why bother getting cut up in all this fucking nonsense here when I can come back on Monday? I can trade a reaction. If the market actually breaks out, I can short it. If the market actually breaks down, goes down, I can actually buy it and send it higher. And if someone already is in the market right now, they've already placed their bets. They've placed them back here on a low or on a high. So when the vol curve actually makes a difference, you got people placing their trades back here, right? You got the vol curve that actually comes up in here and then comes back down next week. And that's why you see people get quiet. They're like, hey, man, if you're not already in, don't be jumping in here because they'll grind you out. They'll whip you right around in here. And it can be like very dangerous in here. So you've got a significant part of experienced traders that are either already long, already short, already trapping in the market with flies or condors. And then within here, things get quiet. That's what happens. So that's why you'll see like the pro channel will get quiet, the main chat, and they're not trying to jump into the middle of this. They're actually sitting back looking for a divisive move to the upside or a divisive move to the downside. As a matter of fact, I went on Twitter last night, FinTwit, early night, and there were a lot of futures traders that had made it clear. They said, hey, Cap, are we going up or down here? Or they made their own post saying, we're right here. Anybody want to take a shot at that? Nobody wanted to because they're like, fuck no. I either want it to be here or I want it to be here, and I'll take a shot at that. So it's kind of like a hands-off thing at this moment. And even this morning, I was in the Discord this morning and being asked about the open, and I was like, I ain't touching that shit in there. You're either already short, already long, and there ain't no way I'm coming on stream for us to do this bullshit in here. No fucking way. I want nothing to do with it. And I'm not going to let you get cut up in there either. I'm not going to let you get cut up, and David AMS ain't going to let you get cut up in the overnight last night. You can get trapped, long or short. You're long, you get trapped. They squeeze us up on data this morning. You're short, or you're long. They trap you in. They don't care if it's going up or down. They just trap you in. You're long, right? They trap you in. They slam it down. You're kicked out. They take your money. Bye-bye. You're short. They trap you in heading into these big data days, and they rip it up and they knock you out again. So just easy layup trades are always better as you enter these time periods. Layups. Because when you're not in these time periods, every day is a layup, right? We're going long. We're going short. Woo! Going long. We're going short. We're going long. We're going short. Uh-oh, we're in the middle of the volatility here. Exit market. We'll re-enter over here if we get any outside range moves. Make sense? So, be aware of that as all of this stuff is building. Okay, be aware that people just hang out. They're like, I'm done checking out. I want you to be aware as the weekend grows closer, to be reminded of the time left in the market, and if there is no resolve to Israel and Iran, you'll likely see people want to be like, fuck this, I'm out of here. And that holds true, too, to the downside. If we end the weekend and you're all, like, bared up, like, woo, market's going to crash over the weekend, Israel's going to start bombing. Something like that, right? And what if over the weekend there's a peace deal? You're going to walk in on Monday and the market is going to be straight vertical. I mean vertical. No need for that exposure, especially during a time like this. There is some real risk out there for an expansion in the war. That's true. That is real. Don't worry about it. Don't fear. I wrote in a brief last night how to trade it. It's fairly easy. As a matter of fact, it's already being hedged elsewhere. You can actually see it being hedged in other issues out there. You can see it happening quietly in the background. So the trade's almost dead at this point, to be honest with you, regardless of what happens. Positioning's already been made. As a matter of fact, we started talking about it a week ago, right? At least a week or two ago. We talked about the vol trade. We talked about the oil trade. Now we're transitioning into a reactionary trade if something were to go wrong. And we're talking right now in the briefs about how you can get cut up trying to time an event like that. And there's no guarantee of you ever getting paid. So the reaction trade from this point forward is probably better for you. If you're trying to like, hey, Cap, what if there's a war over the weekend? The truth would be what? Limit your exposure, right? And trade the reaction. Right? That's probably the trade at this point heading into Friday close. If you haven't had a chance to read the brief, a couple things about the brief last night. I wrote the first brief, and I deleted a text block that was huge. Now, not the brief itself, but some stuff inside of the brief. So then I rewrote the brief, posted it, and it looked like I had rocks in my mouth because I was doing it so fast. I wasn't back-checking my work. About 15 minutes later, I went back in and I did a second or a third, I guess at that point, a third edited version. So if you read the brief early last night, it might be slightly different and more coherent. It was like I did like a rough draft, a finished draft, then deleted shit, then did a rough draft and posted it. But then I went back in and did a final draft, and it looks good, and it seems like it's easy to digest. So if you haven't had a chance to read that, I do recommend that you do read that brief because I won't go over it again. You will not see me address any of that stuff in a brief again because I don't believe in fear-mongering. But I do need you to be aware of risks out there in the market that is unbiased and not full of doom. That the market's going to crash, any of that kind of fucking nonsense. So, while all of this is happening, and all of the stuff that's perceived to be happening out there, no one ever talks about the dealers. And the dealers are trying to accommodate all of you. Think about that. You got dealers out there, and they're like, oh, shit, they're all panicking. So they gotta accommodate you and your fare. They got to accommodate the market possibly squeezing. They got to accommodate if nothing happens, right? They got to accommodate money potentially leaving the market over the weekend. So just be aware of that as well. And their interplay in all of this. Now, let's talk about, WTI, baby. Woohoo! We started this trade a couple weeks ago. It's doing very well right now. WTI trying to make another push to the upside here into resistance at $75. Trading 74.41. I gave you a price target of $75. Pretty goddamn close, right? There are some other moves up here, and it could actually go higher. It could trade $100. But I would not be taking that trade to $100 unless a full-blown war took place. Another note on this. If a full-blown war took place and the market and WTI went to the moon, it would be based upon probably knocking out Iran's oil fail or oil ability to ship oil. Probably less of a million barrels from Iran, but that would quickly be recovered elsewhere. So I would say to you that don't be expecting. I wouldn't be banking on like that squeeze holding. The oil is very shorted right now. So all else equal, squeezes, it'll come straight back down. So make sure you have sell stops to the upside as those squeezes happen. If you are in that oil trade, congratulations too. If you did take the trade, trade's outstanding. Tagged low, bam up, and has been grinding. Squeezed up, hit our target of $75. All this up here is FOMO, and you guys know my thesis on this. This is FOMO crowd up here. I want nothing to do with it. I want nothing to do with this fucking FOMO up here. You may want to. I want nothing to do with it. SPX. Parked on the gamma flip. Looking for one of a few things. Data to send us down. Geopolitical events to send us down. It's not going to crash without that. Or an exit from risk in the market could potentially lead to a drifting down into the weekend. Drifting down into the weekend. Okay? That's that 1 p.m. time frame I gave you, right? The market's already trying to do that right now, isn't it? See how it's already starting to drift? God, I hate when I say this stuff and it's already happening. So, a few things that I want you to know here. This is the all else equal stuff. As we enter into Friday and next week, you should see the market begin. I said this, I think, in the brief last night. You should see the markets. I want to show you this. you should see the market begin to break out of consolidation. Push that to the side for right now. Into the new quarter. What I want to warn you of as we break out of consolidation, if the way is down, and you have just, remember yesterday I said, hey, you want to buy some call spreads? You can wait till tomorrow and you'll probably get a chance, right? You got a chance right now to buy some call spreads. You had a chance on the open to buy some call spreads, right? So I'm going to give you another warning here that'll likely come true from prior experience in this kind of a pattern. You're likely going to get another chance up here somewhere if the way is down, right? You bloodbath down here, you'll see some kind of goofy shit like that. They'll go down there, you'll see some kind of goofy shit like that. Get what I'm saying? So make sure if you want to get short, that you're like back up here. If you want to get long, that you're somewhere down here, like getting long down here, getting short up there. And if you're going to get long, if we break to the downside, you're looking below there, you're looking below there, and you're also looking down there. Stay on these outer edges. If we begin to break to the upside, and they fake you out, we haven't broken yet. So I know you guys are panicking, but you need to break below and get the new low if we're going to break out to the downside. If not, and they ring you back up and send us up here because you've got this gamma bar up in here, right? If you begin to see that kind of shit, right? If you can like get short there if you want, but if you start seeing that breakout, your next short point is up here, way up here. Get it? Not down here. It's where you get trapped. Short here, the break below and a new low, or short here. Make sense? Longing here with stops underneath, longing here with stops underneath for the upside move. Make sense? I hope that does. Probably doesn't. There's probably some of you out there that are like, I just got short cap right here. Go, squeezes, and you go, no, check cap, I closed it right there. Like, don't follow those people. Be short up here. Be long down here. We already told you guys to put ratio hedging for 90 days out at all four of these peaks. Matter of fact, I think we told you there, we told you there, told you there, we told you there, we told you there, we told you there. I'm done telling you. So don't be getting short right here. Get short over here. How many times does I have to tell you? Right over here. If you are a bull, you're looking to get long in here unless we catch a new low. So you break below, you catch. Oh, sorry, I drew that wrong. Let's say you're like, I got a long right here, Cap. Right, you got your stops under here. Right, break down. We broke down, Cap. Okay, your stops are down here. You execute your stops up here. They do one more move up, and then you get out, and then boom, they make their way down to the downside. Make sense? Hope that it does. Otherwise, don't be surprised if you don't see the Discord pro channels having much activity until after each data comes out. So we had data come out this morning. You'll likely see more activity in the Discord afterwards, right? Same thing tomorrow morning. Don't be expecting like David or me in the morning being like, yeah, I'm getting along right here like 5 minutes before unemployment comes out. You're not going to see it. So you'll see us come out after the event, after that data comes out for the reaction trade. All right. Leave that up for you right there. IWM. Talked to you in the brief last night about what to expect down here in IWM. You should see some stretching there, more stretching in DIA. This is part of that warfare trade. Not as much damage yet, though, in Qs, right? Not as much damage in SPY because they have different exposure. VIX is now are squeezed up, hit its upside target up here in the red. It needs more information to start squeezing higher. The target to the upside, if you want to know, is 31.30 up there. 31.30. You also have a cross of the hourly trigger. Whoop. And I also want to show you here in a minute that the vol curve is expected to roll over into next week. But with this war shit, I don't know if that's going to hold true. So let's talk about that really quick. One quick second. Our main screen while I set that up. Put this right here for you. Remember that 1 o'clock I showed you earlier, right? Yeah. Hold on one second here. I'm going to show you different. I'm going to show you one from earlier in the week. Right there. So this right here is from a post that we made in a market brief back on the first time we posted this vol curve was before the beginning of the quarter. We actually posted this vol curve on 9/28, I think, September 28th. And we warned you that as we came into October 3rd and October 4th, that we would get a spike in volatility. Now, the vol curve at that time anticipated a roll down in volatility into the 7th. So today is the start of this right now. That volatility would peak over the weekend and then drop off into the 7th of next week. Now, as things firmed up, this heightened into next week and in the end of the month actually turned down a few days ago. I think 2 or 3 days ago, I think it started to turn down. Now this vol curve has spiked since then, and I want to show you where the vol curve is right now. Just make this small really quick here. Now you can't see this, but can't see the date right here, but this is the 4th. This is tomorrow, Friday. Vol curve is expected to blast down into the 8th. So this is the 7th right here. But see how much higher it is? So we should crank volatility into the weekend. And then a steep drop in volatility into the 7th and 8th. And they're expecting volatility to fall off again into the 16th, 18th, and 22nd and 20th here. It should spike. It looks like it should begin to grow again. There should be another one here. This is October 14th. And then another dip here on the, or another dip and rise again into the end of October. So just give you an update on the vol surface as we move forward. So if we have a vol spike that on, I don't know, back here before the beginning of the quarter, let's say the vol spike was supposed to go to here, right, and then head down. The idea is that that vol spike is higher now into the 7th, 8th. This heightened change in the vol surface is likely assigned to panic, likely assigned to Israel and Iran and the threats ahead. The one thing that I want to make you aware of in this volatility is that we are coming into the anniversary of the terrorist attack of innocent civilians in Israel. There's 1,200 people that lost their lives. And Iran just sent over missiles, right? 240, I think, missiles into. Let me just move this away so you can see the price action there. Move that over a little bit. This is the anniversary of this terrorist attack last year. I've been on the subreddits for Lebanon, for Iran now. I'm watching Iran. I'm not watching, I watch a little bit of the American stuff, but I'm more interested in the chatter from locals on the ground in these countries and finding out if they're hunkering down, if they're being told to go in their basements. They were told to go in their basements before they launched their missiles. Everyone was prepared. Israel knew it was happening. Lebanon knew it was happening. Iran knew it was happening. Right now, there's fear in these countries that something is going to take place into the 7th on the anniversary. Personally, from my experience in the Middle East, I think that they don't. I don't think that you're going to see an attack launched by Israel. I think there's more to gain by people hiding in a hole through that period. And then catching them off guard once they feel like the coast is clear. I know that's ruthless to say, but I do think that when you look at that vol curve saying it's going to peak and drop down into the 7th, I don't think that's the case. I think you're going to see volatility remain elevated into the 7th, and you might see it remain elevated even after the 7th. So I keep that in mind with that vol curve and that vol surface. That if no attack happens over the weekend, let's look. So today is the 3rd, right?
So export share across markets, just seeing a bit of further selling pressure in US equity futures. It's just been trending lower over the last 30 minutes or so after that.
You got the 7th here.
In the red now for major US indices. Do the Nasdaq down by about 0.5%, the same as the S&P.
And then you've got the time period afterwards, right?
Where in other assets, just making you aware though, crude just off session highs.
Remember I told you about
did suggest
the window for,
the striking of Iranian.
or I keep telling you about the window for
we are just
a dip to buy being October 31st.
Relatively flat on the session.
To November 15th, regardless of where price is. Now, if we don't get an attack this weekend and Israel makes them sweat, everyone thinks everything is fine, you got to move higher on a relief rally, and then Israel comes right in and does something nasty. You could still see that downside move in here. Okay, you might get bleeding down here, that kind of nonsense. Just note, I want you to think about these events. Think about over the weekend, did they attack or not? I want you to think about the anniversary of the attack if they don't attack. In the market might free itself up of that risk, and then you'll see Israel do something pretty nasty once everyone's guard is down. So just be aware of that. I'm thinking about that right now, and I want you to think about that as well. Give you some targets down here. Hold on. Sorry about that. I'm not paying attention. I want you to think about that farther out in time, right? You guys always want stuff before and never after, right? First thing that's on my mind right now is there an attack over the weekend or not? Is there a resolution, some kind of a peace talk over the weekend? Is there an attack on the anniversary or not? Does the market unclench over that? Over that fear, and does that actually open the door to Israel doing something fucked up a week or two later, if nothing has happened at that point? Military generals always look at the vol curve. It's fascinating. You would think that like, why does this stuff match up a lot of times? It's because they do put you at ease before things happen oftentimes. Or you price things in before things happen. That can match up as well. But it does coincide frequently, doesn't it? You'd be like, why is that coinciding right now? At any rate, I usually make these things predictions, and they usually come true. So we'll see how it plays out over the weekend and into the You guys never notice? You guys never notice like bad news comes out on a high, good news comes out on a low. You don't think there's like, you're not head scratching that, like price in the doom, then we get off, then the doom happens, like like we price in the fear, then we price in the actual event. If the event actually happens. It's so fucked up, right, Juan? And that's what I'm thinking. Like, I'm thinking right now in my head, I'm like, oh, fuck, they're going to price in all this goddamn doom. And then everybody's going to be relieved, and then you're going to see some stupid shit happen again. That's so fucked up. Okay, hold on one second here. I'm watching this very closely here. Let me just check one more thing here. So I want to check these 4-hour blocks, make sure I got this right. Right there. And there's another gap down here. Right in there. Yeah, right there. Watch this really quick down here. Meanwhile, dealers are keeping us roped in for a good PCI report. I know you don't want to hear that. They're like it's crashing because of the doom. It's like, no, it's dealers. They're all selling strength right now, trying to keep the market roped in.
Just some commentary from the Israeli chief of staff. Just noting
on doom.
To fight.
I should say on doom and on good reports. Like the dealers are like, okay, we got good shit over here, rope that in. Got some doom over here, rope that in. One quick second.
Just an energy update from Barclays. I do reiterate that 85 $85 a barrel. Fair value estimate for Brent.
I think we might be able to make one leg down. I'm not sure.
Surplus in its balance.
Really going to turn this. It's possibly turn this up, but there could be one more leg down. I want to watch this closely here. I want to be able to pay for this spread that I have on for tomorrow. I want to see if I can get some 0 dates. Not yet, but I want to see if I can get the trade paid for so it's a 0 cost to me. Damn calls are over fucking priced. Overpriced for tomorrow, too. $59s. I'm getting old. $69s will go to 0 today, more than likely. I gotta look at something here. If these are going to, well, these are going to 0. If we can get the quick leg down and then up, that would mean that 58s are 0. So like 65s would be the way, or 65s for tomorrow. They're too way expensive right now.
And just according to a tweet from Sky News Arabia, does with the images broadcast by the Houthis of targeting a British oil ship on the 1st of October in the Red Sea.
You guys hear that? Turn that up for you. I think I wrote that right. Sorry, I'm updating the Discord right now. I want more down. I don't like calls for tomorrow. The best trade at the moment, if you think we're going up here, like if you think we're going up right now, the best trade is 69s. Oh, no, sorry. The best trade right now is 69s if you want a long right now. They're probably the best trade, but I would like 65s for like cheaper down here. And then run 65s up to like 68, 69. That would be my preference. I don't know if I'll get my wish here. We'll see. I always like posting on FinTwit that we're going higher. Then they roll it down. I was talking to a buddy last night about it. I'm like, every time I post on FinTwit that we're going up right now, the market, like everybody follows the trade and it just gets fucking counter traded by the dealers every single time. That's why I came on here to tell you guys at 1 o'clock they're going to dump this fucker down. They're like begging me to take the 69s, but I don't want it here. I don't want to trade a 69 from here to here. They'll fucking burn these fucking things in. Like if I took the 69 right now and they pull some bullshit where we grind the fucking rest of the day, those zero dates will be fucking 86th. So I need more down. I need that PT2, baby. I need that juice. I need just a little bit more. Give it to me. Give me that fucking sweep. I might get left behind today. Sometimes I get left behind. Today's one of the days where I might get left behind. It happens. I still have exposure to the upside, so no zero dates for me unless they're fucking cheap. And tomorrow's calls are overpriced. I don't know if you know that, but they're fucking stupid expensive. So trying to get long for tomorrow, probably going to get a chance to buy them really cheap later in the day. Not guaranteed, but a fair chance.
Just to some commentary from Fed's Goolsby says that dock worker strike was predicted and that retailers have been stockpiling. They do have about 2 weeks of stuff, and after that, we'll see more of an effect, he notes. And just some unscheduled remarks here from Goolsby. Reuters reporting Germany is to vote against EU tariffs.
The dock worker strike is not impacting the market. This is a culmination, I assure you.
Against EU tariffs.
This is a culmination of panic by people,
from Reuters.
Which is completely different. Like the layering of panic that's in the psyche of America is just being layered and layered. It's gross. It's not actual for any real reason. Literally nothing has changed. Nothing has affected you except for if you live in Asheville, Augusta, parts of Florida. Those people are in some real fucked up shit. It's a self-reflection right now of the rest of America that's going on. With a fucking ringleader. That guy, man, I'm telling you what, that guy can go fuck himself.
It get worse as it goes on.
And I don't understand that guy. I don't understand, like, if that guy just said, hey, I know a lot of shit's going on right now, I'm not going to inflame it. Just that statement alone. I'm not going to inflame this right now. We'll come back and talk about it in a couple weeks. We're going to remain on strike. That's all I needed to do. The tactics that he's using, I haven't seen those tactics. I'm an old guy. I faintly remember my father. My father was a lobbyist when I was young. Most of my childhood, my dad was I'm not going to tell you. It wasn't for a company. It was for an interest group. And most of my childhood was spent with my dad having politicians and captains of industry and religion over our house all the time. Weekends, a lot of my weekends were spent in very wealthy people's homes or powerful people's homes, around those kinds of people. And I can faintly remember the strong arm tactics that took place in those meetings, those weekend meetings. It was fascinating to see. As a matter of fact, in that time period, I was raised Catholic, Irish Catholic. In a time when religion really mattered and was part of the identity of being Catholic and Irish in America. Still, we went to Catholic school. I was an altar boy. I was a Cub Scout. I was all those things. And then you'd have like a Sunday get together with this guy that was a politician, this guy that was a business leader, and the priests. And they'd do like brunch or something, either at a big rectory at a big church. And all the priests would get shit-faced. or at one of these
More
homes
from
of my
Goldsby.
father
He
or
says
my
we have
father's
largely
family's
gotten
friends, and these
inflation
guys
down.
would just like they weren't priests anymore. They would just hang out and get fucking annihilated, and they would make business deals. That's what went on. But I remember the strong arm tactics.
says the
Even though I
inflation
didn't know
numbers
what
at
they
the
were
Fed's
talking
target,
about, you
labour
could
market is at
see
full
the
employment.
like breakout sessions. We'd be playing with our little army men and stuff, and you would see these guys all like break out and
comment there. He said
have
the new
small
inflation numbers are at the Fed's
conversations.
target, and the labour market is at full employment.
You'd even see reporters there that were off the record, hanging out and drinking and eating and partying with these guys. And they would put deals together behind closed doors before it ever hit the streets, you know? And you'd think some of these people wouldn't be hanging out, and they were. And I'm not old enough to remember the strikes before the 1980s. I'm not that old. But if you were to ask an older person, like, are those tactics the norm today? No, not in the U.S. They were, though, at one time, regardless of what was going on in the country and the world. I think that's shocking for Americans, right? To see someone doing that. At least today it is. I don't think that it was at one time, but I think today it's shocking to see that.
Basically at target.
Someone asked, how do I explain how I judge how expensive options are? Is it all basically just experience? That's what it is. I watch options chains all day long.
At 25,
I focus on the same options chain personally. I look at SPY, zero dates, all day,
neutral,
every day. Get in the habit of that. Have a screen open somewhere. Whatever product you like trading. There are other ways to look at it. Thinkorswim has a way to chart. I think not just Thinkorswim. I think Tasty might also, but there are easier ways to see this stuff. You can actually chart out the life of an option. They'll show you. So options go to die, right? You guys know that? Like most options are meant to expire at 0. Assuming most of you know that, please say yes, I know that, Cap. It's like most options are destined to die at 0, especially the ones that you're trading. Most of you guys aren't out there buying $50 options that expire at 100. But most option chains you can chart out, and you can watch a specific option, and it'll usually follow a curve like this. It's like an easy way to know if you should get long or get short, get long or get short. Doesn't always work, but there are simplified ways to look at them. For me personally, I like to watch the actual chain for a multitude of reasons. I want to see the premium kicks inside of a chain. I want to see like when the dealers are sneaking in. They're like little, not as much as they used to be. We'll talk about that in a moment. It's kind of fun, too, to watch. Like, I know Binky watches farther out in time options, and I know that Volwiz does, too. I don't have the time streaming to do that anymore, but what I used to do, you want to know what I used to do? When I first started streaming, I used to do this. Hold on one second here. This is a cool little thing. Get your little pens and papers out for a quick tool. Get your. Listen, I sound like an old man. Get your paper and pencil out. Get your erasers out, boys and girls. Get your notepad out on your fucking phone. I know you're trading on iPhones right now. Write this down. When we're going into a acknowledged by everybody top or acknowledged by everybody perceived bottom, so if we're like cranking, and everyone's like, mostly everybody's like, that big 0 up there is the target. We're going to crash, but that's the target up there, right? I'm a bear. Market's going to crash, but we know the target's up there and price is moving up there.
Saudi Arabia, Israeli media says the response to the Iranian attack will be within a few days.
You might be let me show you. Let me explain this better to you. That's a good question. We're going to look at that right now. It's a really good question. Let's find a ticker, any ticker. Give me a AMD. Look at it. No, what moves really fast?
There's
Let's
more
do
Goolsby, just noticing
NVIDIA.
a partisanization of consumer confidence readings, making them less informative for consumer spending.
I haven't looked at NVIDIA in a bit. It's a good one. No, I need more up down. Maybe this might not be a good one. What moves really hard and fast up and down? Multiple levels. I don't know if this is the best one. I'm trying to find a ticker that maybe it is like, yeah, NDX can do it for me. Can give the example. I think NDX can. Yeah, NDX is pretty good. NDX will think, yeah, this will do it well. There's always good. The fuck did I just do? Okay. Good question. Damn it, I should have got calls. Sorry about that. Let's get back to what we're talking about. This is NDX. And I love it. I used to love trading Qs using NDX because it moves slow and slowish. I don't know if it's slowish, but it moves more in between levels. There's more space. You can see the moves clearer in my view on NDX than you can on NQ or QQQs. And I draw a level. I don't do it anymore. You don't have time anymore, but I used to draw levels on like big zeros, right? Like 18,500, 1900, stuff like that.
383 billion.
And here's a great example right here of it. So I know VolWiz does this. I know I think Binky does it. But let's say we're up here, okay? And let's say you snap a line there. Now, we don't know any of this yet. We don't know any of this information yet. And you draw another. Let's say you're drawing this before it even happens, okay? Roughly in this vicinity. Doesn't matter if it's slightly higher. Doesn't matter if it's slightly higher. Doesn't matter. You're like, yeah, it's probably a nice point right there. Right? You're like, yeah, you got all that gap right down there. I'm going to draw another one right there. And I'm going to draw this in the future right about here. And I'm going to draw this one right down here. I'm not even looking at this. Just over here, I'm looking. I'm going to draw another one right about there. And if that breaks, you're going to go lower and close that gap. Right? So you draw that in the future. Before you even get there. I'm actually looking at all this stuff to draw all these lines over here, right?
Further regarding China and EVs, do you know Spain called
So, hold on here. I got to turn this shit off.
Ahead of the EU votes on EV tariffs.
So you only have this information right here. If you only have this information again and 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 again, right? You do this over and over and over every time we go up and down in NDX. Before we even begin trading this, you're looking for way farther out in time, right? Way farther out in time over here, especially for this. Let's say we're coming up here, right? This is the actual price action. And you're watching the options farther out in time over here and over here. Farther out in time. And even over here. Or even over here. But on these levels. So as we're approaching, you'll see dealers go in and you'll actually see like calls as we're coming up. calls over here are losing value or not going with price. And it signifies a top is coming. Before that top actually gets there, like right here, you'll start to see puts over here, even though it's for over here. But you'll see like a put dated over here begin to gain value before the roll even happens. And that's a dealer that's pricing in the roll down so that by the time you get here, these are priced in and you buy some and they're above you actually. They're like right up here, dealers up there. Then they bounce. So my point here is that you can watch like a 0-day chain if that's what you're trading, or if you're trading like farther out in time options. If you watch that chain, you're looking for the ebb and flow of premium in an option, usually on 0s and 5s, before any move happens. So before a major shift, is there premium being built into these downside moves or not? If it isn't, we're likely going up. If it is, before the roll happens, you can already forecast that we're likely near a top and it's going to roll down. What's fascinating about that is you can trade all that over here and not be caring about any of this. You're just trading the premium. That's it. And you'll get those boosts without the move even happening. And you'll be in before or when the dealers are in, like little gremlins and stuff, already knowing the roll is coming. So it doesn't matter the time frame that you're trading, but watch a chain that you are interested in, or a time frame. Let's say, like, hey, Cap, I only trade 3 months out. Start watching the 3 month out and the 6 month out contracts, or if they have them. Or 3 month, if you're trading 3 month, maybe the 4 month out contracts to see what the dealers are doing in the background. Now, for me, I trade 0 dates. So I become familiar with when their turn is happening on a 0 date basis, right? When they're attempting to turn or not. So I pay attention to that options channel. I watch it all day long. And if something's too expensive, I'm like, I don't know. I'm not committed to that. If I see like a strike and like where they're going to zero shit out at the end of the day, I'm like, it should be a little bit lower than that, or it should be here and there. Or I don't like this trade, or like even if I take the trade, it's not the best trade, right? Like, so like today I wanted 65. I think 65's at 50 to 75 cents. They weren't giving me the opportunity. So I'm like, I'll take a shittier trade. We'll let it run. So I'm not happy with that trade, but you are watching those chains to find out the best deal that you can get, and then the ramp in that premium for that turn to the upside. Anyways, watch chains is my point. And if you watch them, especially in higher frames and in higher and lower price changes, the cool part is if you're watching the 0s and 5s in particular for farther out in time, you will see specifically on those strikes the ebb and flow before major moves happen is my point. So if let's say you're watching an options chain that's 3 months out and you're getting these big moves back here, you'll actually see the turns here, way over here. You'll see like, let's say you'll see like puts go down in value over here. Remember that puts are over here. You'll see the puts go down and down in value. And then all of a sudden, those puts over there will level off as price is going higher. Then you'll see those puts way over there begin to increase in value. And you'll be like, why are those things increasing in value when we're still going up? Because we're about to make a turn to the downside. And then someone's jumping in here, and someone's jumping in here, and someone's jumping in here. And you're actually in the puts like right here for this time period over here. So you can get some crystal ball shit. Now, can price, if that premiums kicks over here and we continue higher, you will see the reversal in that premium, but it works a lot. It's fairly predictive farther out in time. So if you have any more questions on that, I want you to, at least in our own Discord, I know if you ask, Binky about it. He'll explain it, how he does it. Binky, when new contracts comes out, he looks for where people load up. Banks, particularly. There are traders out there that new contract comes out and they're loading up the boat around options chain, and he monitors that shit through the life of the chain. So get with him at some point, and he'll talk to you about that. I don't have the time to do that anymore. I used to do it. As a matter of fact, I used to trade with Joe Donut back in the day. Him and I used to trade together, and I'd be like, we'd be at a perceived top or bottom, and I would get with Joe and go, bro, we're gonna we'd be like up at a top, and this is an example. It was normally bottoms, but I'd be like, Joe, dude, we're gonna start buying like these strikes, and these strikes over here. Like, and price would be like right here. And I'd be like, we're gonna start buying those strikes. Watch, those things are gonna start fucking getting kicked, man. And it'd be like bam, and then we'd both be like, whoa, bro, these are already printing. We're not even at a bottom yet. And I'd be like, all right, we're gonna cash those out right here. Oh my god, we're getting a kick down here. Oh my god, we're getting a kick over there. And we'd track the entire trade as it went. It's kind of boring though. So well, it's kind of boring if you're a streamer. So I don't do it anymore. It was a lot of fun. Now, one other thing on zero dates. Zero DTEs, right? I miss the zero date chains of old. Or no, hold on, let me get back to the main stuff over here. Hang tight, let me just clear all this. Sorry, I'm not paying attention here. On FinTwit, I don't know who pushes this shit, but I don't know who pushes this shit, but there's a narrative out there that retail traders ruined the landscape of zero-day trading. I'm going to tell you the true history of zero-day trading as it impacts today. This is the real history. When Wall Street Bets came in line, online, when it was created, there were it was an outlet for professional traders. I want you to know this: professional traders are a weird bunch. They might be atheists, but they believe in astrology. They believe in luck. They're like gamblers. They're not gamblers, but they're very similar to like a guy you'd find at a horse track. Is it raining today? Or I don't trust the price. I don't believe the market's real. Like all these different things, like day traders, pros, pit traders. They believe in like rules. They believe in like hexes and shit, like weird shit. They have all these different sayings. They have like rhymes, and they just like have a culture. And they're very smart. And it's a smart that's different than intelligence. It's almost like street smarts. It's kind of like being a doctor and then being an ER doctor. Two different things. Matter of fact, your brain works differently. They you know who else does well at this is like restaurant servers or a bartender. Professional traders have another quality to them where they can do triage. And they have this like, they come off as crazy, but they're not crazy. It's like that. Anyways, when Wall Street Bets was started, it was a place for those kind of people. They were like quants, or they were smart, or they were good at triage, and they were professionals, and they had a place to hang out on Reddit. So they hung out on Reddit, and they were pros. And it was the kind of place where it was like the Dewey Cox story. Dewey, you don't want none of this. Go away. And so that subreddit was kind of a quiet, closed place. Even though it was open, it was a closed place. And they would shit all over some some dude who walked in and was like, "What are you guys doing in here?" And it's like the Dewey Cox story. Dewey, you don't want none of this. Slam the door shut, right? And these guys are brutal. These guys are, or gals or guys, doesn't matter. They are a different breed of trader. A lot of black humor, a lot of rules, a lot of no, never, this, no, like, just like, I don't know, it's kind of, they're their own thing. So Wall Street Bets is the kind of place where you'd walk into and they'd be like, get the fuck out of here. They would literally, if you posted something, they would, as a group, check your history and then auto ban you. 90 days. Auto banned. Or say a word, auto banned. So it's a very, still an exclusive place for a lot of years. Now, in that time period, those guys are really hella smart. These are like traders. These are guys or gals that know the secrets of the markets, know the secrets of options chains. They're very smart. So that at that time, no one was sharing that information. And it was their own little thing. They have like one guy that would run one special trade at specific times of the week, the month, the quarter, and that was their bread and butter. And they knew this shit worked, especially in the zero-date chains, the arbitrage. So talking to you about watching chains 1-3 months out or whatever, there's like an expanded view of that. On the zero-date chain, the dealers would be like little gremlins, right? That would run around and they would tinker in the background and they would adjust the chains. And there was a time period leading up probably into 2014, 15, 16, 17, somewhere in there where it was still unknown. But then it started to leak in Wall Street Bets. And like GME, anything that's good becomes too many people know about it. And Wall Street eventually, because they're dumb as fuck even though they're smart, figures it out and they exploit these things. GME, same thing happened. Once they listened to the smart guy that wasn't listened to in that back room, he's like, guys, I just want to tell you what's going on. They're like, fuck that guy over there. The smartest guys in the room, right? And eventually, as they started getting torched, they said, all right, let's go with the nerd in the corner. And he explains what's going on. And zero dates were like that. So you've got too much information out in public, and a good thing went away, where you could go into a zero-date chain on a Friday and make stupid money because no one was paying attention. You were slipping your hand in the pocket of the fat old white guy with the greasy fat hands and the gold ring that was going to have to get cut off. Then you could slip out a lot of money. And no one noticed. All legal, all fine. No one cared. At that time, people would trade the market, wrap up a Friday, and walk away. No one was watching a zero date out of the money from 4:01 to 4:15. And all the little gremlins would come in, and you would see an option and a zero date option just like literally like up 1,000%, down 1,000%, up 2,000%. I mean, that much. Like, and these fucking guys are going in there, and they were like, "Oh, we're gonna buy like a fucking 1,000 of these fucking things at a penny and watch this shit." And it would go 20 cents upside sell point, and you'd be in and out just like that, right? And then non-market participants, kids, would be like, they go to Wall Street Bets, like, my dad beats me, or my mom's an alcoholic, my dad beats me, and I got really good grades, but they make too much money and they're not going to pay for my college. I'm so totally fucked, bro. And so they'd be like, okay, show me your proof. So like you'd have to show them, I got accepted into this university. I'm an A student. Here's a picture of my drunkard dad, or here's my dad. My dad's he's got to wear his wife beater. He wants to kill me. Here's a picture of the mobile home I live in. here's the project I live in the hood. And you just like prove it to them. Then one of those smart guys that knew about this would be like, hey, man, I'll show you exactly. You got to do exactly what I tell you to do, exactly when I tell you to do it, and exactly get out. And then you're out of this fucking sub. We're going to ban you for life. How much you got? I don't have any money, man. They just gave me my college tuition, though. I've got 10 grand. Okay, set up an account, and we're going to run this trade on a Friday. Now, all this stuff started leaking. So before you know it, those smart guys, just like GME, they want to run that shit too, right? And just like GME. And so too much of a good thing, it's quiet, becomes a little bit too public, gets examined, gets studied. And I think the first time so now it's not retailers. Now it's Wall Street. It's out of the hand of the kick-ass trader. It's in the hand of a retailer that a smart guy took a shine to. And now it's being studied by Wall Street, hedge funds, I don't know, your fucking local strip mall boiler room. Too many people know about it. First time that I saw a change, which is bizarre because you get told a story on public about it's all retailers' fault. And when you read that, you think it's me or someone else today trading 0 dates, but it isn't. It all changed. In my view, I noticed it grow over the years and the ability to make money in that arbitrage go down as it grew over the years. But the first time I noticed the shift was COVID. No, not COVID. Sorry. It was January 7th of 2022. That first leg down in January of 2022. I get the wrong time frame. I noticed for the first time 0 dates being used to amplify moves in the market, in puts and in calls. And I mean, like, never had I seen the volume. There's no retailers with that kind of money. And the precision of it. And the ability to open all that shit and close all that shit with fills whenever the fuck they felt like it. And I was like, wait a minute, this is not us. This isn't even a hedge fund. This is mechanical. This is someone with access. So is it dealers? Is it banks? Is it funds? It ain't something small. It ain't someone playing around and dicking around in the background as the gremlins were working. Someone was amplifying and swinging markets. So today when they're saying, well, it's retail's fault, maybe they're saying it was the original Wall Street bet gang or whatever. But no one reads it like that. They read it like it's today's retail trader, and it really isn't them. It's probably a mix of dealers, which they claim they don't. Market professional large firms. You might say it's high-frequency trading firms or AI bot trading, but truthfully, that shit back then, which wasn't that long ago, right? January of 2022, it's probably Wall Street that's doing it, and they are likely to blame. Now, what sucks about that is that when I trade arbitrage today, it's nowhere near as easy as it once was. It used to be so fucking easy. And there was so much excess in those chains. It was insane. And it's slowly become more and more benign. As a matter of fact, last year, I think CME or something said that they were aware of it. The Fed said they were aware of it. Everyone's aware of it now, and they're monitoring it. And then I noticed that the returns got smaller and smaller, and I was like, now they're baiting you to trade this shit and then just taking it from you. So it's now just a trap. From what it was once, it's now a trap. I mean, it still prints here and there. You can get some good deals and make some money, but nowhere fucking near what it once was. So that kind of sucks. And it does kind of suck that they blame you and I or other traders out there today. Like, it's all your fault. It's like, fucking not our fucking fault. You're the fucking people doing this shit. And I'll give you the last correlation to GME. after the party or before people knew the party was over, that whole thing started getting watched and examined and studied by scientists that work for banks and smart Wall Streeters. And they were like, well, shit, look at all this money these guys are making. We need to capitalize on this now. So now you see a rise of baskets of fucking meme stocks. Not by you, by fucking banks, dudes. They literally have like a whole basket of memes that they trade. And they're the ones that are the reason for why you see like these memes doing this stupid shit. You like sell that shit down for a whole goddamn quarter and they take the goddamn hedge off and let it squeeze. They're in that trade with you too. It isn't even you doing it. You think it's you and it's not. It's just another strategy that they've hoarded out because too many people knew. And zero dates are like that today. It's what it is. Some of you out there like he's made a few comments that aren't real or wrong or does, but I'll tell you what, that's my experience. So for me, it is, and you can't change my story because I was there. So you're not gonna. I saw that shit about the Wall Street Bets movie. That shit was wrong. Fucking well, it's kind of right based on some fiction, some nonfiction, and then the GameStop was a blend of a lot of bullshit and some truth. So, anyways, arbitrage and options chains. Get with Binky. He'll tell you all about it. VolWiz does it too. Have you ever noticed like VolWiz always in his notes points out like I'm watching this and I'm watching that. And then VolWiz and other traders go a step further. They negotiate. Can I get this for that? Can I pay this for that? Can I do this and that? They talk to their brokers on a regular basis. So, anyways, what's the thesis or what's the moral of that long drawn out story? If you like to have 20 fucking monitors on, dedicate one shitty monitor to a chain that you usually, whatever you trade, Tesla, I don't care, fucking ticker symbol PORN, whatever it is, and you just watch that goddamn chain in that time frame that you normally trade, and you stare at it for 5 or 10 years. That's what you do. It's like, I don't know, if you run rivers or if you hike or if you drive a car, you get familiar with it, don't you? You're like, yeah, that looks right. That doesn't look right. Something there looks wrong. They're pricing in this shit over here. Why are puts expensive right now? You guys know why puts get expensive. You guys know why calls get expensive. But anyways, it's not so much why are they expensive or cheap. It's that they are when they shouldn't be, or they are when they should be, and when they're turning, like the ebb and flow of price. Exactly, Terrorwolf. Time's right now. We got some time here, don't we? They didn't dump it too much, though. I thought it would go lower. There's 4 p.m. Can I get that in the shot there? It's like a Mexican standoff now between now and the bell. You don't want to be short into non-farm payroll. You want to be short. Everybody's exiting the market. They're all scared. You figure you're drawing a big green box. It's been sitting there all week. It's where you buy. No one listens. Like, doom, dude. I'm like, nope, that's the buy box. That's the buy box. And that's the sell box up there. He draws these green boxes in and he draws these red boxes in, but I'm selling in those green boxes and he's and I'm trying to buy in those red boxes. I'm trying to sell the green box. He's trying to buy it. And then he's up there in the red box trying to sell it, and he's a bull, and I'm trying to buy it. I was a bear because I'm all bulled up now. Oh, God. Yeah. So Ray just said, tell him about how dealers used to communicate to each other with order size. Dude, I still write. So I used to trade zero dates with size, like 30, 40, 50, $60,000 in zero dates. And they fucking started fucking me. I was so mad. I was so angry. I got into a fight once with my broker about it. They refunded me a bunch of money, and I'm like, I swear to fucking God, I'm gonna leave. I don't do this anymore. But so then I switched to hiding my order flow, so they wouldn't know it was me. Like initially, they weren't doing anything to me. Like initially, I'd put a large order in, and it would be like fill, no counter trading, and I would make bank. And then all of a sudden, like it was like 3 or 4 weeks later, and all of a sudden it was bad fills, murder me for a little bit, murder me, have to stay in the trade, and they would still go my way. But I'm like, dude, you're fucking taking me for $5,000. $6,000, $8,000. You're literally lining your goddamn pockets and then putting me out to the wolves. So I'm like, you sons of bitches. I'm like, I don't know if you guys understand this. Like, you guys are like, no, Cav, that's not true. Let me tell you what. These fucking guys, right? They know that if I'm going in with size like 50, 60, 80 grand, right? All I need to pull out is $5,000 or $6,000. I'm done. Like, bam, hit them, take the money and bounce in like 2-3 ticks. These fucking guys would automatically dump my shit in my. You guys are gonna be like, that's not real. You bet your ass it is. They would like, I don't know if they were bundling me or delaying the fill or whatever the fuck they were. I would watch it inside the. I'd watch the goddamn shit in my fucking brokerage. No fill, then fill, bam, slam it down. They take the money and run. And then make me fucking stay in the trade longer than I needed to be and put me at more risk. I got this big, huge fight. Like, it's just like so mad. And I don't care what you tell me. I was the one that witnessed it with my own goddamn eyes. So fucking mad. Like, we got this sucker over here, and he's like, this guy's like going in with some size on zero dates. We're gonna shave him and then force him to stay in for more ticks. That's exactly what was going on. Just slippage. Well, it's slippage, but it was like, if you want to play this game with us, you're gonna pay us. You're paying to play now, buddy. Yep, that shit worked like 5 times. It ain't working anymore with us. I didn't even care where we're going. I just needed ticks. Ticks for like 5 or 10 grand, and I'm out. Out of there. See you later. Bye-bye. Yeah, I'm not a whale. I'm just a fucking shitty fucking retailer. I still have the fucking I still to this day keep the goddamn I print out my fucking year every year. I should go dig them up and show them to you when I was trading like that. It was disgusting. It was pretty fucking gross. I don't do that shit anymore. It's now a rule. I don't bother. We should do a video with Binky. We should do like a live stream with Binky one day on a slow day and have him talk or explain how he moves around the options chain. He talks to me about it all the time. We'll have like a Sunday or a Friday conversation, and we chat about what he does. I don't know if you guys know this, but or if you're a viewer, you might not know this. Like, I spend time with most of these guys. Like, I'll call them up or they'll call me up and we just talk. And I'm always like, what are you doing? Like, what are you up to? Uh, what's going on fucking 3 months from now? That up there. We at one time we talked about getting older traders and doing interviews. We should get back into that if we ever have the time. Like doing long form interviews and getting some of this shit out to the public. I see that Ray Gun, the illest, is talking about stuff that's, you just don't hear about it anymore. I think I've got a computer somewhere. I know the internet's archives and all that is going away, but I have a computer hard drive somewhere. I still have it. I don't know where it is, but it's in like a box somewhere. I've got my old laptops with all the shit from the old school Yahoo days. Like I still have that stuff. I still have I used to trade crypto and stocks way back in the day. And I used to download a bunch of shit from the Yahoo message boards, a bunch of data from Yahoo message boards, and I kept a bunch of that shit. One day I'm going to dig it out. I'll have to break out. Every time I lose a laptop, I just throw it in a box. I don't actually remove the hard drive and save the data. I just leave it over there. I'm like, yeah, I'll go get it. I got pictures on that shit. I got this. I got that. And it's just sitting in a box somewhere. Oh, yeah, I told you guys I did GME today, didn't I? You guys want to look at GME really quick? All right. Let's talk GME. You guys were asking about it yesterday. Here's NDX. We'll look at GME. I do GME for supporters. By the way, if you're a supporter, if you're watching the show and if you're watching the show, right? Our supporter level, which is dirt cheap. I'm not trying to push what we do at all. But I want to just let you know for information wise, we have a supporter level. I think it's $28 or $30 a month if you sign up for a year. It's dirt cheap. You get like a market brief from me every night. You get access to our Discord with people that are really trading in and out all day long and throughout the night. Most nights, not every night. With some really cool tools. They cost a ton of money. And tools inside of the Discord. And then you also get access to like pivot point tools. And one of the cool things is that the most traded stocks on the internet, we do it twice a day, updated chart where you can manipulate the chart and see triggers and velocity on a 30-minute basis. I think GME is on that list. So if you're ever looking for like trigger, I know that other people charge for that kind of shit a lot of money, $200-$300, $400, $600-$700. It's $30 goddamn dollars. You can just look at GME whenever the fuck you want. It's dirt fucking cheap. It's like but between the taxes I got to pay on that, like you talk a third of that's gone. Then the cost of the time and the cost of hosting all that shit, I make nothing, dudes. You guys don't realize I don't make shit. It literally pays for the security, the safety, the developments, and I get left with nothing. You can ask Joe Donut, Bork. They'll tell you the same fucking thing. Anyways, GME, let's talk about them right now. So if you are a supporter, you can look at this all the time whenever you want, is my point. Let's go look at GME and see what we can see. So what's really neat here is this is way back when the big run happened, right? And I want you to like just quickly look at something important. Do you see how triggers work? I'm not going to show the velocity yet, but just triggers, and then you've got like a bear market for GME. You really didn't even need to listen to Hello Kitty, to Roaring Kitty. You can actually see the cross happening right here before the move. I'm going to show that to you. I don't know where you were here, but I know where I was. I don't know where you were in here, but I know where I was too. You can ask a guy called, what's his name? There's a guy on Twitter that knows me from back then. Suspected Saboteur is his name. His name's Suspected Saboteur. Look him up. He knows that I was involved in this here. You can ask him. Matter of fact, he's a Tesla Q guy. So he should naturally not like me. But we are good friends. We've known each other since Wall Street Bet days. So you can actually see the move as it happens here. Or at least the threat of the move happening here. Cross, right? The bigger thing, though, was before we even got there, you can see the verticalness of the daily trigger and the verticalness of the weekly trigger crossing the monthly trigger. So even if you weren't caught up or didn't know, or you wanted to check Roaring Kitty, it was there before we even got there. Now, let's pretend that price went down. That's okay. But the potential is there before you get there. It's telling you, predicting to you that there's risk to the upside there. Same thing happens to risk for a crash. If this chart was inversed and this price had turned around, you would say, risk of crash is there. Now, risk of crash is gone. Everything is normal again. But it is predictive. So let's look now to today. Where are we today? And there's something fascinating happening, right? You see that GME enters a bear market, gets slammed down, slammed down, slammed down. And we're in a bear market when price is below the monthly trigger. And then all of a sudden, you see a confluence of triggers. And you also see something else, like the meeting of a 6-month trigger, right? And you also see, what else do you want to be looking at here? Do you see this right here? I want to show you this. You see how you have a reversal, right? Down, 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 and then it starts to move up. Bear market, down, 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 down. Starts to move up. And we're not there yet. Even with this squeeze, we're not there yet. But you start to see Momo or momentum shifting up on way higher time frames. You see the same thing here. This is something, this trigger here, right, follows over many, many years, like SPY, Qs. It's like a shark. It's always there. And the more time you buy, the less damage happens. If you don't have time, the more violent and more damage happens. So if a ticker or an issue trades sideways in a bear market and not a crash, eventually the damage becomes less over time, right? You're either going to trade sideways or get violent. So as you're trading sideways in the bear case for more crashes down here, it actually lessens. Jerome knows this, that the longer he sends a market sideways, the less damage will take place. That's how we get lost decades too. So what is happening right now? We had this like boom, turn around the daily candle, boom, sends us higher. What is this reminiscent of? All of this. It's all reminiscent of that last squeeze. Where do we squeeze? $64. Pretty good, right? 64 bucks. Traded 10. It's pretty good. Not great, but pretty good. But there's something else going on in the background. You're getting the daily trigger breaking above, and now you're getting the weekly trigger breaking above. And everyone out there is going to tell you things like, that ain't ever happening again. Yeah, that would be the case if the weekly was like going back down here, even though price was going higher. That would be the case if the quarterly and the 6 month wasn't going up here. And then you want to check and see something else. Do all these higher frame momentum, is it flattening? Or is it vertical still? It implies that there's flattening right now, doesn't it? Now, we don't know what Cohen or anyone else is going to say, or if it's going to get bought out, or if they're actually going to come up with some AI shit, or they're going to go bankrupt. They can go bankrupt. They got a ton of cash. This stuff is saying that something is going to happen in a positive way right now. It's not telling you the blue line is not heading down. It's turning up. So I don't know what that news is. I don't know what's going to be said. I don't know what's going to happen. All I know is that Momo is turning up. I know that not dealers, but true market makers are looking to accumulate for something to happen in the future. As of right now, this could be wrong, and this stock could go to zero at any moment. But for right now, this is predicting, saying there's going to be a shift for GME. So, how do you trade this? Well, if GME was going to go to zero, you explain to me why mother effers deep are buying it on a monthly basis. They're buying it. It ain't me. It ain't you. This doesn't look good over here on a weekly basis. This looks pretty good, okayish. Maybe a small spike, but I want to see that. I'd really like to see like this down. And I'd like to see a little more turn here on a 6 month basis or quarterly basis, excuse me. So let's take a peek again. We're on that daily basis. Look at this 30-minute basis. And look what's happening. You have a powerful force coming up that's weak right now. So without looking at velocity, you would say that weekly is going to send price higher. But we already know that that weekly is weak. So this probably doesn't hold. The initial thought would be it's going to move right now. I would say no, and this is probably false, and they're going to fuck a bunch of you. It's taken a lot of work for that weekly trigger to get price to go up and hold here. The monthly trigger is strong. So let's look at the daily trigger and see if this lends any help or not to that weak ass daily trigger. And it looks pretty good on a 30-minute basis. Not bad, not great. I still have some concern, though, about that weekly velocity on a daily time frame. Daily, I would say, is great on a 30-minute basis, which is good for like intraday, intra-week kind of stuff. But on a higher frame, no. So, is there anything that we can expect to look forward to here? If the weekly needs a breather, we could probably project that price would not hold the weekly, although the monthly is strong. And we would really like to see that weekly bend down and then help that really strong monthly trigger. So we want this to be strong and this to be strong at the same time. So there's a possibility of a drift down here, right? And once the weekly gets stronger again, that would be your next squeeze over there. So I don't know how long this takes, but what I would say to you would be on a 4-hour basis, that's $4 and $6 down there. And you're looking for this move over here, right? I would posit that you're likely going to get another squeeze. But still come down here. Now, what I want to show you is this. That weekly, watch me closely here. Told you how that weekly is weak, right? That weekly would then be strong. As the monthly is above it, and this here is strong. And so you get that daily trigger, come right down there. So you get price goes up here. I don't really care if it's here or here. Don't care. Some kind of bad news. But once it gets up in here, that Vela would be turning up on a weekly basis. This would be daily would be turning up on a daily basis. And you'd have the strength of that monthly, and you're probably going to get a monster move. So whew. Maybe that's the real one right there where you break out and above. Up, down, $8, M&A maybe. There is a risk down here that they could go bankrupt if they don't come up with a plan. So this is what I'll predict. Squeeze potential, yes. Ultimately targeting $8. There will be some kind of news here, either positive or negative. If they break below and start going lower than $8, that would suck. I'd be monitoring this, and if you are able to get above here, I'd be monitoring December, January of 2025, and be what if price is here, and if you see all of these kind of things come down here, maybe you get an announcement in the first of the 2025. So if you don't get a bankruptcy, if you don't get bullshit down here, I'd be looking towards an announcement from GME in 2025. for a potential M&A in the springtime, or they've come up finally with a plan on how to make money in a real fundamental way. So there you go. There's your GME analysis. Not there. There can be an argument made for a squeeze here, but there is a so this is what I think happens. This would be plan A. There can be an argument made because you've already broken out here. There can be an argument made that it's down, up, and there's an announcement. If you can get up here and hold and get a new high, I would give you more quarter. It would be plan B, plan A, plan B. Plan A, plan B, plan C. This is really bad news. Bankruptcy. Pink sheets. GME. So plan A, big path. Plan B would be you would need to break out and up. If you do break out and up, you'll start squeezing like plan A. But I wouldn't put any belief in that right now. Will I do snow? No. I will. I can't. I don't have the time to do it right now. It takes like 20 minutes to look through that stuff. You can. Plan B can happen, but you need events for that to happen. Plan A is without any other information. Plan B is with new information. Plan C is with new information too. If you go down there, be very careful. If you go down to that $8 target, make sure that you are like aware that there could be some kind of a negative announcement. If that negative announcement doesn't come, I'd be long as fuck down there. $8, $10, ride that fucker. It's gonna moon. I'll do snow. I can't do it today. I don't have the time right now. I will. How about to write it down? Okay, so Tesla. I've been asked about Tesla. Please, on Tesla, I posted for you what I posted for pro traders on a higher frame. Please refer to that. I posted it yesterday. That takes a lot of work to do on a higher frame. I'm not watching those little moves on Tesla. You had an event-driven on Tesla. You had an event-driven run, right? You had an event, came up. You had. We'll go look at it right now. I feel so bad. On Tesla. Let's look at Tesla really quick. On Tesla, you had a window to the downside. It closed. Right? Get bullish again. Swoop up, right? Comes back down. Right? No new high. Slams back down on trend. Comes up. Not bullish yet. Right? Comes down. Fails right here. Are you bullish here? I told you then. I got it on video. No, not bullish. Trade is still to the downside. Window is open. You bounced here. You failed to get the new high. That is a doorway to downside. They did make the high right here, though, didn't they? The recheck back on the daily trigger, that's where you get long. And this is now event-driven to the upside. So the trade was from right here to where? The yellow box right there. Right? That's where the trade was. This is the extension for the FOMOers. Back here, GS said, hold your calls through the event. We made fun of it in the Discord. We said, look at GS telling you to hold calls through. So what did they do to you? What did GS do to you? They sold into you. Took their money and ran. And now you're back testing the daily trigger, right? They might give you a way out, but where are you headed to next? And why are you headed there? Why are you headed over here? Because Tesla is event driven, aren't they? The event is over. They took their money and ran. You're likely going to be given a chance to get out. Right? Everybody gets at least one chance usually. And if this was the event and they have their next ER, right? Who wants to pay for that? Remember, they entered here. There's an opportunity to bounce here and go higher. That's your monthly trigger. You have an opportunity to exit, go to the upside. Or we get a little bit of down move to get it even cheaper. Make sense? Here's your window. October 15th, November 15th, right here. See it? Window of opportunity, no matter where it is, to buy Tesla. Make sense? Does that make any sense? Now, you might be like, hey, Cap, what about 300? Well, they can take care of that over here, can't they? And over there. Now, let's say you're like, hey, Cap, you're wrong again, bro. That's fine. I can be wrong here. Let's remove all of this. Remove everything. And you're bulled up. You're like, Cap, it's going to bounce, bro. It's coming down into its daily trigger. What is the first thing that we're going to do? Mind you, we have Tesla on the website with fully manipulatable charts on a 30-minute basis. So let's go to the 30-minute and see what we can see. This is what you have access to on the website. You have weekly trigger crossing the monthly trigger. This is a catalyst. This is a point. Damn it. You got a catalyst here. October 17th. You have me telling you So we're in October, right? That would mean that this line is going to intersect in the month of October. You have price raging down. I would expect that after being event driven that it wants to come down here and see what's going on. Back check and just make sure, right? We're heading higher. First thing I'd be thinking. Now let's check velocity on Tesla on a 30-minute basis. Damn it. Now let's see something about Tesla. What do I tell you guys about Tesla? Best time every time to buy Tesla is on major lows of daily velocity in a 30-minute time frame. Just sit back and relax until that happens. Every time. And you don't want to buy the peak. You don't know that's the bottom, do you? You need to see a series of higher lows on Velo, don't you? To even begin to start getting bullish with a higher frame over time, right? Like months, and then it ramps up here, right? Gets bullish. So what's going on with Tesla right now? Yeah, we're losing some Velo here, aren't we? So at best case scenario, you're kind of expecting that, right? Best case scenario, kind of expecting that. Well, that's right around that October 14th, isn't it? Even to consider a dip buy. That's not in your favor as a bull. Let's look at some other history here with Tesla. Oh, look at that. You got the instigation of the trade back here. V-shaped recovery. Okay. Instigation of a V-shaped recovery. There. A little bit of excess in there. You see that? Excess, 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 excess. Scene of the crime is if you're a bull right now, currently with Tesla where it's trading, you need to see price get above that and above that. You have to see it first. Come back down and retest the change in the hourly velo for more continuation of the upside. That's what you need. I don't need that. We can start. I don't believe in this at all. Yeah, that might work. Give you a chance to exit. There. Test. Solid 1, 2. Maybe break out there. Capitulation. Yeah. I think I got this right. Okay, so you can get out of this, but this is what I'm going to show you. 1. There you can get out. There's your 2. There's your 3. One, 2, and 3 capitulation check. This is your consolidation. And your breakout, and you actually get that one right there. And we'll talk more about that later. Consolidate, consolidate. Here. There's your November 15th over there. I gotta move all that shit over, don't I? No, let's just draw that shit. It's garbage. I'm gonna draw this in later. Sorry, my thing is fucked up here. Get rid of that. Slam down. Pretend that's November 15th. Your velo swings back up right here. Bam, 2 and 3. Some consolidating in here. You could see some new lows down here in that period. You might actually see another one down there. I had set an alert on 202. Give you some more time in there. 1, 2, and this accounts for your bounce off. Give you a chance. They're gonna tell you you're getting here and here. They're gonna lie to you. They're gonna slam you right down in there. They're gonna put the real fucking screws to you down here. You're gonna start bouncing around, and I'd be looking for buys like 202, 200. And for a super ramp to trade that actual target heading into the end of the year, and then higher to 300 into maybe January, February, or something like that. I'll draw this out for you later. Hold on. I got to do this like, let me just redraw this. I got to think about this. Let's go on a 4-hour basis. It's January. You can fucking see it right there. Get your break below the daily trigger. That's going to piss you off. And you get trapped right there. Capitulation. Whatever that bullshit is. Maybe you get that and you're off and running. You might not get that low. That's 187. That's worst case scenario. You may not get that. But I would set an alert at $202, and I would set an alert at 219, 220. 220, 202, 187. And they're definitely going to test this shit. You're getting a test here. And the initiation of the move is right here. That's the move. There's another initiation right here. Once you lose that, that's where everybody panics. It's like that one down there. Maybe a doom. Take the entire fucking move away from you. I don't know when Q4 earnings are. Maybe they sell down into it and you get the relief in there. It's possible it goes all the way down there. Yeah. V-shaped recovery. Give me a V. Everybody's wanting to get long again. Everybody's like, bro, it's a V-shaped recovery, bro. We're going here. Instead, they grind your ass. Quick capitulation, move higher. I got this. That's what they do to you. Fuck you, fuck you, fuck you. Fuck you, here's some hope. Fuck you again. Capitulation, bam. Escape into the end of the year. March 300. Let's see if we follow this. I'm interested to see if that's the path we follow. If you're like, Cap, there's no way, bro. You're wrong. You're way, way too hard of yourself. So be it. Show me this here. Get higher. Show me the turn on the hourly trigger. Get me the new high here, and we'll start talking about getting long. I'll get back long with you over here somewhere. Until then, that's the goddamn path. Fucking Tesla bulls. Every goddamn time. Let's see if that's bullish, too. Yeah, that shit's still bullish. Look at that shit. Still bullish. And you're still on trend. Ugh. That's still bullish into the end of the year. Ugh. Fucking bulls. Lion, I'm going to tell you something. These fucking guys up here are trapped, and they are going to be pissed. Like, that's what it is right there, minimum. And your velo is going to finally turn. Oh God, I gotta have to listen to Tesla bulls for like, ugh. Ugh. They listen to Tesla bulls for how long? Ugh. A month and a half of Captain, can you chart Tesla again? I'm a Tesla bull, by the way. I'm gonna have to. I hate listening to Tesla bulls for a whole month. I'm gonna ruin my entire fall. I'm gonna be out there like leaf peeping. Cap, can you chart Tesla for me when you get back from leaf peeping? Cap, can you be waking up in the morning, drinking a cup of coffee, say good morning in Discord? Cap, can you chart Tesla this morning before the open? I love all you Tesla bulls and bears out there. I got you guys. They can turn up. You just got to show me the money first. Show me that the demand is there. If not, you're gonna get bent over. I promise. Carefully, you're listening to out there. I'll tell you that. JPM now coming out with Dune that they've sold everything. GS telling you they sold everything. The U.S. State Department spokesman Matthew Miller says that the United States is working with Israel to determine the shape, scale, and targets of an Israeli air campaign against Iran. But they have not made clear they do not believe the Iranian nuclear program should be targeted. Let me read that to you one more time. They have not made clear that they do not believe the Iranian nuclear program should be targeted. I also want you to be aware that 2 weeks ago, the United States said that they could take out every land-based missile silo in Russia and China within 2 hours. That was not a threat to China or Russia because both have nuclear submarines. That was an indirect threat to Iran that they do not have nuclear submarines that are known, and that the United States can take out every fucking nuclear silo they have. Some of you out there are going to say, yeah, but Cap, they've got shit buried 300 feet in the ground. I'm sorry. You can dig that shit out and they'll bomb it again. The answer is no. You are wrong. And no, Iran is no threat to the United States of America, nor the world. So I want you to know, though, that has not been made clear as being off the table. That is a real risk to our markets. Please refer back to the brief from last night on that news. Also, U.S. State Department spokesman Matthew Miller says that the United States is working with Israel to determine the shape, scale, and targets of an Israeli air campaign against Iran, but that they have made clear they do not believe the Iranian nuclear program should be targeted. So the U.S. is saying we disagree with this, but it is not clear if it will be targeted, and that they're willing to work with Israel in those targeted strikes as long as it does not include nuclear facilities. I would think at this point they're working towards nuclear weapons. I would think they have them. Let's not pussyfoot around this. They likely have nuclear weapons. You don't know where they are either. There is some risk here in the background. They could smuggle nuclear weapons into Israel. Dirty bombs are on the table more than likely. There was whispers last night. I had the trade the news shit on last night. There was talk of Saudi Arabian leaders meeting in Qatar, trying to put a hasty ceasefire together. That's likely off the table for Israel at this point. Not necessarily that Israel will attack, but or at this moment that they'll attack. There's no way they're giving up the threat of attack through the remembrance of that attack last year. They're not giving that up. So they're going to let them sweat no matter what. Like your best case scenario is that your best case scenario before a negotiating table is sat down at is to let them sweat through October 7th, 10th in that vicinity. Like that's at minimum. You can expect that. What are your thoughts out there? Let me ask you, without getting up, try not to comment with your positioning, or if you're like a natural bear, try to give me your objective, non-emotional, non-reactive thought process here. Do you think the risk is benign? Do you think it's like the Cuban Missile Crisis? Do you think that there's real danger there? Do you think that there's not danger there? Like, tell me what you guys think. I want to read what you guys have to say. I want to make sure if I'm on base or off base or how far off base I am. I want you guys to know something. Like, I have very sociopathic tendencies in my life. And some things in my life I try to look at very objectively, or people tell me that. I just want to know if you guys, am I off base on this? I try to look at things, some things very cruel, would be considered cruel. Recommended literature. Tough. I spent time in the Middle East and I spent time in Asia. When I went to college, I learned Western philosophy. Very topical on Eastern philosophy. When I lived in Asia, I couldn't grasp it until I lived there. Once I lived there, I got it. Same with the Middle East. Middle East very very similar. It's hard to relate unless you've lived there or you have family. It's weird. Like I can tell you certain things. Like, have you ever lived in a society where there's not a lot of information given to you? I can say that to you, and you can think you understand that, but you don't until you are there. This is horrible to say, but it's real. You guys think that everybody's dumb in the U.S., right? You're like, man, people are dumb. Americans are dumb as fuck. Some of you might say they're smart, but they get fed propaganda. Not until you go to a country where they don't give you anything. They're almost naive to the point of children. Like literal. Or their world is just what's in front of them. And the foundation of that. It's not negative. It's just, this is my world. This is what means the most to me. And so you can easily influence. You think you're easily influenced. You know how, like, if you go to an uncontacted civilization and you fly in with a plane, they're like, that's a god over there, right? There is some scaling to that in closed societies. Maybe like, Cap, they're not closed society. Well, in terms of dissemination of any kind of information, they can be, or even access to information. It's a whole different world. So they can say, we can talk about that unless you were there or have been there or have experienced it. It's hard to grasp. I always relate. My favorite one to relate is always my time in Asia. if you are raised in the West and you spend any time in Asia, it is very incongruent in your. And I'm not talking about tourist areas. I'm talking about living amongst people or in areas that are not tourist driven. You can clearly see a philosophical difference in society. It's not negative either. It's not a bad thing. It's just, oh, I grew up where everybody takes a left-hand turn and drives on the right or drives on the left, right? Everybody drives in the left-hand seat. Everybody takes or everybody drives on the right-hand side of the road and is sitting on the left-hand side of the seat, right? It's an easy way to think about this. In an American car, right, you sit in the left and you drive on the right. You go somewhere else where that's not the case, and you're like, wow, this is kind of hard to get used to, right? I'm getting used to it, but I'm not used to this. Think about that on a scale where philosophy is completely different than you. And it's an information overload for you when you're there. You're like, whoa, this is all different. Like, not bad, just I can see how, you all draw with 3 fingers and we all draw with 2 fingers. It's not bad or anything like that. And you're like, I'm going to try to learn how you draw. And so it helps you to, to reconcile the contrast in different philosophy. And I would say the same thing about the Middle East to some extent. So oftentimes Americans are like, why are they doing this? Why are they doing that? Why are they doing this? I'm like, oh man, if you lived there, you'd fucking know. Like, it's totally fucking rational. Like, but you can't say that to an American because, you live in your fucking 30% of you never left your state. 60% of you have never left your region. Like, literally, that's real. So I don't know. Like, you're trying to talk to somebody about what it's like living in the Middle East? Hard. Not easy. Not easy. Or why this or why that, or I don't like talking about that stuff on public a lot because I don't want people to think that I'm, like racist or anything, or even religionist or something. I'm not. I know people are different and they have different experiences, and it's hard to relate to. It's hard to relate on like a stream about stock market stuff. I'm fascinated by. Okay, so I'm reading some of what you guys are saying right now. I am fascinated right now by what happens because the July War in 2006 was very much like, if we have any history to go on, it's funny to read about the July War because any description of it is hijacked by both parties, so you can't even really give your opinion on what that war was. It's hijacked completely from their perspective, and both parties, and you're just like, this is insane. Especially as an American, you're like, this is insane. But it is a good example of historically what happened. I see someone right now posting they should resolve things they didn't resolve in that time period. But we know what else happened in 2012. They didn't do that, did they? And we saw what happened with the 240 missiles this week, didn't we? So there's still that Middle Eastern influence even over what's happening this week or even next week, the week after. The other day I said something about how, like, I don't like saying this, but Meet the Zohan always makes me cackle because there's a lot of truth in that movie. There really is a lot of truth in that movie, even with all the death and destruction. And that's the one thing about the Middle East is when it does get bloody and nasty, it's horrible, isn't it? It's horrible. You see some like horrific shit. But then the filler stuff is very much to me like that movie. I'm serious. Like I would not be shocked to see a fake show of force. I'm shitting you not. It's absurdist in our view, in my view as an American. But I wouldn't blink. I'd be like, oh, fuck, there we go again. And it's like two little old ladies or it's like grumpier old men. How many years has this been going on? Long, 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 long time, right? It's almost like you want it to continue to go on, and maybe some other powers want it to continue to go on. But if you look at it from like an American eye or American perspective, there's a deal being put together amongst Saudi Arabia and Israel. I think that possibly Saudi Arabia set Iran up, and in turn Hezbollah. At the time, that wasn't the perception. At the time, the perception was Hezbollah is trying to break the deal up. I'm looking at all this shit, and I'm like, I doubt it. I think that they knew Iran and Hezbollah was going to be a problem, so they instigated likely the confrontation that we're in now to give the justification to Israel to remove Hezbollah from power in Lebanon and remove Iran's ability to break up the deal as well. That's what I think is going on. And you're going to see Qatar, SA, which is Saudi Arabia, put that deal together, hammer it in stone. You're going to see Hezbollah maimed for a period of time, 10 or 20 years. And you'll likely see Iran at least be leashed or from doing any major damage that being removed. It looks like that's what it is. But it's the Middle fucking East. Nothing would surprise me in the Middle East. Nothing. Zero would surprise me. I always feel like it's like when you saw we put transmitters to blow up their pagers, so they switched to cell phones, and those blew up. It's almost like a bad comedy or a bad movie. Like that's a lot of the Middle East is like that. Or at least in my experience, it's been like that. So not necessarily a bad thing either. Hell, I laughed my balls off and shit like that when I was there, but it's like a part of the culture and part of like we got one over on you. Even if it's horrific. I don't know what to think here. I think I made a decision not to think too much about it. Just if things got bad, where do I buy a dip? And if things pass, be aware of it for an upside move. And I want you to know, if you don't get the briefs, I want you to know something. I haven't said this to you. If this expands into a war, even in World War II, there was an almost immediate recovery in the stock market, and it fucking moons. So I think this morning I said I was highlighting keywords like resilience. If you are afraid out there, I think I then highlighted it later this afternoon when I came back on. I want you to be aware of something. Unless we've got burning tires down every street in America, this market is resilient, and our economy and our country is. And you should not relate whatever happens between Israel and Iran, the worst that could happen, to our market going to zero. That ain't happening. Not happening. Buy that fucking dip. If this market plunges 10% over the weekend over some shit, have cash available. There are statistics that prove my point. I posted them in the market brief last night. You guys all know this, right? All the way back to World War II. There's no example, or there's a few examples where it was kind of lackluster, but our markets are resilient to those events. I'm going to read Zero Hedge. Let me see. What does that have to do with the market, though? What's the? I'm reading it right now. Should I have more? Huh? The message is it's a good time to reduce stock exposure and increase your allocation to cash and gold. What do I have to say to that? If you're going to, how do I explain that? That's a really, to me, that's a very loaded post from ZH. So, hold on, I'll answer that question. I'll answer that one for you. Let's dissect it. Everything above is garbage. I'm going to tell you the facts. Everything in that post is garbage. I will address what it translates into. It's a good time to reduce stock exposure and increase your allocation to cash and gold. Why? And I don't mean like increase your allocation to cash and gold. I mean, why would you do that afterwards for? So let's talk about wealth. Let's discuss wealth. We're going to end up deleting that post, but don't delete it yet. And we're going to discuss wealth. I read some discussion yesterday about wealth. And the posit was made that if the stock market crashes, wealth disappears. That's what was said. And on the surface, it sounds correct. And it makes sense. So the posit would be if the stock market crashed and went into a bear market, 12-year bear market, 10-year lost decade, wealth disappears. So that cancels out putting your money into cash, right? It also cancels out putting your money into gold. We know that gold, when we have a crash or a bear market, goes down. It doesn't actually go higher. Let's talk about that, though. Put all of your money into cash. Or let's say you say, put all your money into real estate. Hide the elephant of money, right? All this money, it shifts and moves around, right? To escape inflation, to escape low returns in the bond market. And in this case, to escape future low returns in the stock market. We already know if Trump wins, likely a crash, almost immediate. Okay, so that makes some sense. If you're to put some money in, take the money out of the stock market, if Trump wins, this could be a political post where these people think Trump will win. And they want you to have cash because if it crashes, they're going to say, look, we were right. Now put that money back in the stock market. That made a good answer for me. But let's talk about wealth. Let's talk about your money and your assets. And let's talk about what people say when we have a crash or a bear market or anything like that. Wealth goes away. Wealth shrinks. And there's nothing you can do about it. You cannot run from it. So buy gold. I don't know. I don't know what you say. I'm going to tell you that wealth does not go away in a market crash, nor in a bear market or a sideways market for everyone. And I'm going to make that posit to you, that you are incorrect in that statement for a lot of people. If that was the case, why are some people wealthy through crashes and recessions? Why is some people they weather them like it's nobody's business? Nobody cares. And I'm going to relate it to you on an easy to understand basis. In 2001 and in 2008. Now, in 2001, right? In 2008, when 2001 I was becoming an adult. 2008, I was in my mid to late 20s and 30s and stuff. And I lived in some very wealthy places. And I'm going to tell you what I found fascinating about those two time periods. I made a lot of money. I made a ton of money. Matter of fact, I started a couple businesses in those two time periods. And as everyone was getting flushed out, it was very easy for me to buy and build businesses cheap. And you know what the best part of starting a business in those time periods was? All the competition was going bankrupt. And the statement here would be two things, right? Hide your money, hide your wives, hide your husbands, hide your kids, hide your dogs, hide your cats. Doom's coming. And there's another voice going, all wealth shrinks. You can't escape it. Your house will be not valuable. Your gold will be not valuable. Everything goes down. You can't escape it and outrun it. Well, I have experience outrunning it. I do. So if you were expecting the presidential candidate to be assassinated, and if you were expecting, I don't know, the whole entire economy to collapse over it, and it's not just the idea of if he wins that there'll be a crash. Would I put my money into the dollar or gold? I might invest in gold just prior to, or I might invest just prior to it in gold or the dollar, and take my money out of the market, put it into the dollar. Dollar goes up, but I would definitely remove my goddamn money from the dollar and gold before it actually happened. And what would I be trying to do to not be trapped in my wealth shrinking? Well, from my experience when I was a younger man, I know boomers don't like telling you this. What would I be doing? I wouldn't have it in those asset classes. I would be doing what? I'm going to spend a year, 2-3 years, and I'm going to try to find a way to start a business that will generate me more money. If that happens. When you look at boomers transferring wealth right now, if a boomer has spent their lives building a business and their business is worth, let's say, $10 million, that business and that wealth brings them every year, let's say, $1 to $3 million. That's 10 to 30% profit. That's wealth. I'm worth $10 million, and I get a paycheck every fucking year for $1 to $3 million. The moment that I sell that business or pass that business along, and I get paid my 10 million or 5 million, whatever I negotiate to, I get that 5 million bucks. Maybe I get 8, or I get 10 and have to pay off another 2 million in debt and shit, or another 3 million in debt. I'm left after taxes with $4 or $5 million, let's say. That $4 or $5 million is not being put to work, is it? And I'm exiting life. So I spend it, spend it, spend it, and spend it. And that wealth is now gone, isn't it? If I go in a similar fashion into a recession or a depression, if I don't put my money to work in those time periods, I will. My wealth will shrink, won't it? So if there was a recommendation in this situation where what Zero Hedge is saying to you, I would firmly disagree with them. And I would say to you, if you believe what Zero Hedge is saying to you right now with that utter fucking garbage, I would say you should have lots of money and start looking to start a business. If wealth is going to shrink and the economy is going to crash, you would want to put your money to work right now, wouldn't you? If you believe that. So you've got $1 million and there's a threat that your million will be worth 500,000, you might as well start a business. Matter of fact, your money's worth more right now. So why not just buy a bunch of shit and start printing money off the money you invested? If it ain't going to be in the stock market, what do you do? If you think there's going to be a recession or a crash and you ascribe to what that guy says right there, I call him fucking wrong. The answer is not what he is saying. And if you're posting that, I'm assuming that means that you think that's going to happen. So if you think that's going to happen, I would say to you, start a goddamn business in a recession. Start researching it. Start building a list of equipment, talent, whatever you need, material. And guess what? Guess what happens? Make that whole entire plan. And it comes time for you to hire that help. They're going to be cheap because you're in Doomville. If you're going to buy a drill press, I bet you it's expensive right now, but if you get that plan in place and you get a bunch of cash on hand, I bet you can get that drill press cheap. And if some other asshole bought that drill press for too much, you get to get it at a discount. And they got wealthy, and now their money's burning. I would say to you, get ready to start a business. You can outrun the shrink of wealth by starting a business in a recession or depression. Does that work for you guys? So now delete that goddamn post. He's wrong. Guy's wrong. Not you, Salamar. ZH is wrong. I will tell you that if anyone tells you that wealth shrinks in a recession or depression, I would tell you that the real money runs to starting a business on the cheap. That is where the big money goes. That's where the herd money goes. Metamorph says, ZH has been saying sell stock, hoard cash, gold since I found them in 2011. Did you guys see the post I made yesterday? ZH had a post yesterday about, I think it was GDP or debt. You guys didn't see the post that I made about the debt to GDP ratio turning around? You guys want to see it? Go, I'll repost it right now for you. I'll repost it right now. Take a look at it. Hold on here. I'll repost it. Here. I got no likes. Shocker. This one was poignant. I just reposted it. Go ahead, look at it. Look at the image. Look at that big point up there, that big straight point up there. That red point, right? Go on Twitter. Good, go on Twitter. I just reposted it on my profile. Go to CaptainJimJames, but I don't know what the fuck it is now. It's like 8/19/34/65. Google search CaptainJimJames. I just reposted it. I'll just pin it. I'll just pin that fucking thing to my profile. Okay? It's pinned to my profile now. You can't miss it. Debt to GDP ratio, U.S. gross national debt as a percentage of GDP. Bears don't like seeing that shit. You see that big spike up? Do you see how that spike is now coming back down? And then I want you to click on the post from Zero Hedge from yesterday. And he wrote, doozy. Now look at that chart from Zero Hedge. That chart shows that spike, doesn't it? But that chart doesn't show the rest of the story, does it? Thank you, Rolling White Balls. No one, like on Twitter, sometimes I get like 500 likes. People are like, fuck you for posting that. I want the doom. Give me the Kool-Aid. What is you serving me? Reality? I don't want no reality. I want Kool-Aid, damn it. I ain't liking that shit. Give me the doom. How much did his post get? How many likes did it get? 2.4 thousand likes. Woo! 2.4 thousand likes. Do you know how many happy people seeing that? It took to get 2.4 thousand likes? Holy fuck. It's absurd. We should overlay both charts together. That'll really like stir the shit pot. I'm just like, I saw that post yesterday and so when he posted that, I'm like, I know that. I wasn't even thinking about it. I just saw the post and I go, I know that chart. I was like, that chart is not accurate. I was like, why did he post that thing for? I was like, I don't know why he did that. So I was like, dude, I wasn't even thinking about it. I was looking at the chart. I was like, that fucking thing is wrong. So I like went over to Wolf's site and I'm like, fucking Wolf's got this shit on lockdown. I'm like, I gotta go over there and find it. It took me like 5 minutes. I'm like, oh, there it is. Like, I'm gonna repost that shit right now. Sorry. I should put them side by side. I wish they could put them side by side. Doozy. U.S. total debt. We're actually doing what? We're outrunning this. I'm surprised. I wasn't expecting us to outrun this. GDP has the potential to outrun U.S. debt. We are a service-based GDP economy, or GDP based on service as our main driver. But you got like everybody out there. I think even Democrats, you guys all want to bring back manufacturing to the U.S. Can you imagine having service and manufacturing? Oh, excuse me. Very strong. It'd be wild. GDP would moon. That's the actual effect. GDP would moon, and you would outrun debt. And it wouldn't matter as much how much debt we actually have. It would just be more of up and to the right. So, yeah, it sucks being a bear. Yeah, it does. It's hard being a bear. It's not easy. Like, that's the grift goes on, the fraud goes on, and all that kind of stuff. I don't like the debt in our. Well, I think it's two sided. I don't think I was talking about Joe Donut yesterday. We were talking about like Joe and I were talking about the bureaucracy. So Joe and I yesterday were talking about MAGA, and we were doing an introspective from an objective point of view about MAGA, and we were discussing Vance. I shouldn't talk about this, but it's related to this. So I will. So the discussion had to do with like why did MAGA gain traction? And I'm always fascinated when I talk to Democrats and Republicans and MAGA and Antifa and all these other, like every goddamn faction out there. I'm like you talk to them all and you're trying to like get information. And I find it so fascinating that like the easy picker would be our politicians that trade the stock market, right? It's an easy one. Where every single person in the United States does not want that, right? There's not a single person. Like I've never met a single person like, yeah, I want that to go on. No matter what you are, who you are, what you believe in, it's a softball, right? Like it's a softball. Yet I'll speak to a Republican that's like, Nancy Pelosi, she's doing that shit. And then I'm like, what about that Republican that's doing it? And they're like, oh, hell no, he ain't. I'm like, oh, God, you're all on the same side of a lot of shit. And we were talking about, and this discussion led to what originally what MAGA was about, like drain the swamp. I'm like, man, I hear that same shit from Democrats too. I hear Democrats out there screaming that they want police reform, prison reform, all these different reforms. And I'm like, man, that sounds like a non-waste in our bureaucracy. And do you know a Democrat or Republican that wants to see most criminals that can be rehabilitated recommit their crimes? No. If someone gets a DWI, do you want them to get 2 or 3 or 4 or 5? I don't think there's anyone that says yes to that. Does our county government try to make money off that? Yes. Do they want you to reoffend? Yes. They want the money. I'm using that as an example, but it's all over. It's everything, right? We have someone that commits a crime, maybe not like murder or rape or something like that, heinous like that. Let's say you've got just like someone that like, I don't know, they robbed a bank. Do you want them to rob a? No one got hurt. Do you want them to rob a bank yet? Fuck no. Do you want them to pay a price? Yes. But do you want them to rehabilitated? Yes. Everybody wants that. So, debt to GDP ratio and the U.S. debt. And how does that relate to that? I think everybody wants the debt to come down. I don't think you're all that far away from it. And you'd probably want the money that you spend to go to a good cause, right? Like if you give money to mental health or health care or whatever it is, you just want it to be used well, don't you? Don't tell me you don't. I know you do. And GDP is kind of that same thing. And now it's being used as a fear for you out there. Our GDP is out of control. And it's like, well, yes, it is. But the economy continues to grow. They keep making money. And our GDP continues to track it and work it down. And surprisingly, if you look at the debt to GDP ratio, let's look at it really quick. If you look at the debt to GDP ratio, as a matter of fact, this is a concern, right? Remember when the bears were out there telling you that the debt to GDP ratio was a concern? Looks like they worked on it. Hold on here. Looks like they realized that, doesn't it? Out of control, right? Warning, warning, warning. And now it's coming back down. Not only is it coming back down, but it's coming back into what? Line. So remember when I tell you that data is coming back into line, and they don't want this. Oh, sorry. Hold on here. Give me a second here. Hold on. This is all messed up. Come on. What are you? Stop it. This ain't working. Okay. So this is trend, right? These are the people telling you they gotta rein shit in too, right? But they've been enjoying it. So I tell you guys this all the time. I'm like, hold on, we gotta go back there. This is trend, right? This is trend, right? Up, down, around, right, up, down. Danger, right? Comes back down. And it's about to turn down, isn't it? You want this to stay in trend, don't you? So you have velocity to the upside, but you also have velocity back down to the downside. The Fed and the Treasury Department and their government wants to do this, don't they? What they don't want to happen is for it to blast through. What is the consequence of velocity to the downside of the GDP to debt ratio? It's recession. It's depression, believe it or not. So they got to arrest it, right? And then bring it back into line. So you've got people out there saying, doom, 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 right? And now it's actually coming back down. And they don't ever say you did a good job, do they? And what they don't also tell you is that if you break through, that you could do more damage. And you risk 5 or 10 years of even more volatility, don't you? So right where we are right now is a critical point of what? Arresting velocity in the data coming through our markets and our economy. Even if we fail, you have to arrest the velocity of it. You guys understand what I'm saying? You guys get what I'm throwing down here? Make sense? Doesn't make sense. I don't know. And let me show you this. Hold on here. We got issues here. Come on now. I got wonkiness going on right now. I guess this ain't gonna work. Sorry about that. Oh, that's why, because it's working on the other side of the thing. Instead, what are you given? That's all you're shown. That's it. They didn't show you this, did they? They didn't show you GDP chasing it. They didn't show you the ratio turning back down. They didn't show it back in line. And you know the other fascinating part about this is? This is the real killer here. This is the one that gets me. This is total U.S. debt, but if you can't see it here. Let me see if I can show it to you up here. This is on a time frame of December 22 to December, or there's a June of 23, 2024, and it's not a frame that is a few months. It's not a frame over 5 years or 10 years. Sorry. It's not on a time frame over a decade or two. So when you hear like the noise from CNBC or Bloomberg or FinTwit, they'll say to you like the Fed's preferred inflation gauge. It's like a 3-month period, right? 1 month doesn't make a trend, 3-month does. But then you've got the smart guys out there and gals, the scientists and shit, and they're like, hey, boss, if you look at this over a 10-year or 20-year period, we're coming into line right now. And if you don't make some changes, the effect of not making those changes early enough could amplify 5-10 years down the road. So when you start to see the Fed loosening right now, is it something that matters today? No. It's something that matters in 5 or 10 years. So when you hear people arguing out there right now that the Fed should retighten, or that the Fed is lost everything, or that the Fed is too late, probably not. We don't know. People that say that we're going to continue to retighten, wrong. Likely not. They're likely looking at much higher frames than 3 months or year over year. They're looking, or it's year over year, but not on a 5-year frame. It's probably like 10, 20 years. And they can see this momentum coming down from the top in a big way. The velocity to the upside they took seriously too, and that is why they tightened at the rate and the amount that they did. Remember that the fastest rate of tightening we've ever done was this cycle. No, we didn't go to 20 points, but we went velocity the quickest we've ever gone, didn't we? And it wasn't meant for us to go to 20. It was meant to arrest the velocity of data coming in. It was straight vertical, up or down. And we have now velocity coming back down, and you do not want it to do this, do you? If you had like normal velocity back here, you don't want to overshoot this stuff. You could like literally tear the United States apart. Or you're from Russia or China, and you would want that to happen. Or you are being fed misinformation unknowingly by an outside entity that would like to see nothing less than the United States and our economy eventually rip itself apart from volatility and data 5 or 10 or 20 years from now, in my view. I would say just that commentary on we all want this, but we're all in different parties. I don't have any real commentary on that. I'm trying to relate that to the market. That when you see people saying like, you know, the debt is really bad or the debt to GDP ratio is really bad, it is. I don't know anybody that doesn't want to bring manufacturing back to the U.S. I don't know anybody that doesn't. Doesn't want to do that. We have bigger shit to fry in our pan right now, or shit to fry in our pot right now. Joe and I were discussing yesterday about automation. Everyone right now is like, what do we care? We're going to automate everything. But we have another problem. We don't know how to automate. We've outsourced even that. We don't even have anybody that can or that is a craftsman anymore or craftswoman. We've lost trades that have been passed down for a long time because of outsourcing. So forget like we'll build robots. We don't even have the know-how to train a robot to do this stuff. The Zumwalt, I think, class destroyer is being taken out of service, right? It's been nothing but a headache. Do you know why? We don't have trades people to build those ships. We are outsourcing even intelligence right now, like intelligence, human intelligence out of this country. So we're being put in fighting with each other and saying we don't want, we're going to defund schools. And we want to keep people from coming into the country as immigrants. In our heyday of being manufacturers, what did we do? Think about the United States as a manufacturing power. What made us great? We took craftsmen from other countries into this country. The best stonemasons, the best nuclear scientists. We didn't have that intelligence or that history. So we stole it. Not stole, but took it. We might need some of that again. So we got to bring those people in that actually have that history and that intelligence. You know, the kids that send their kids to school and pound them in the books all day long. We don't do that in the U.S. anymore, do we? So we're slowly losing all of that craft and science and intelligence, hand-me-down, that kind of stuff. We've lost that, too. It's not just we don't have enough population. So I don't know that we can even make that jump. If we bring manufacturing back to the U.S. and if we try to automate, I don't think we have the intelligence either. So we got some problems, and we're all fighting about it right now, right? We're all like, I don't think anybody wants illegal immigrants that are here without being documented or vetted or all that kind of stuff. I think everybody wants that. And I think we need those people to some extent, especially if they have a craft, right? Or they have a something we don't have or we don't want to do or whatever. We've done that before. That's what made us great in the first place. So I don't know. We were just discussing it yesterday. We were just discussing like how close people are and how far away they are. And the debt to GDP ratio, we were crazy about it, right? It's out of control. And now it's turning down and no one's saying anything, are they? It's like move on to the next thing and make another complaint. So I don't know what to say to that. When you guys read that stuff, like when you guys read like doom, 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 I'm like, okay, that's cool. We were just talking about that doom a few months ago, weren't we? And that doom right there is not the same anymore. It's been fixed. And now the next job is to stop the velocity of it. And it's like now pointing a finger at something else going, look at that over there. That's the problem. And you're like, wait a minute. You were just talking about the fucking debt to GDP ratio. It's coming down now. Well, it's not that. It's this over here. And you're like, wait a minute. Why is this being said to me? Is it because it's real or is it because of fake or we're working on it? Well, let's work on it. Let's do it. Let's get together and work on the debt problem. Let's work on GDP problem. Looks like they're fixing it. Inflation was raging straight vertical. It's come down straight vertical. So the reality versus what is pushed on you as the threats is not always accurate. Would be the point that I'm trying to make to you. When I say craft, I don't mean roofing. Roofing is a service in my view, I'll be honest with you. Or I would say to you, roofing in the turn of the century is not the same roofing as it is today, is it? That was a craft, wasn't it? It wasn't slamming up roof after roof after roof, is it? Or was it? In no way, shape, or form was roofing then the same as it is today. But I'm talking about craftsmanship. Or high intelligence, or where do we build stuff? We don't build it here, do we? We build shit in Taiwan, don't we? Where the fuck is your Apple iPhone manufactured? Not in the U.S. We don't have people that can do that work here. If you were to move the iPhone production into the U.S., that we have skilled employees to build those iPhones, you're out of your fucking skull. Not you personally, I mean, just the audience in general. If you think that we have the skilled personnel to do that, you're out of your skull. We have the concepts. I want it to do this and I want it to do that. But we don't design or even develop that stuff. We design and develop the concepts, but we outsource most of that work. Ask a developer. They'll tell you. They go to India for it. Ask them. They outsource it all day long. It's not just price. It's the amount of compute. It's the number of available individuals that have that intelligence, right? Even if they're not what you want. You know it's true, right? Come on. So we probably, if we're going to bring manufacturing back to the United States, what do we have to do? Forget the politics for a minute. What do we got to do? We need some smart-ass kids, don't we? Forget making more babies. We need to ensure that our kids are at a high level of education, don't we? Or we got to import them. Which is it going to be? I need to know. You need to let me know. I need to find out. You tell me how we get there. The Zumwalt class destroyer was built in America by Americans. It fucking failed. Look it up. Look it up. This isn't my opinion. Look it up. Zumwalt class of destroyer failed. Why? We can just have AI do it for us? I know. We just have AI do it for us. The AI needs input. It hasn't become sentient yet, or hasn't become the singularity yet. It's still just a learned model. You guys are hilarious. I love these answers. We're not there yet. Dems are in charge of the project. I like shit posting like that's fine. But think about that stuff. You guys should be thinking about this. Like our future of our nation depends upon it. Like seriously, forget the politics, put it all aside. Our GDP depends upon it. Our manufacturing numbers depend upon it. It really does. Our economy, our stock market depends upon it. It really does. Like 20, 30, 40, 50 years from now, it does. It does matter. Dude, how do you think we developed the bomb? It's the same thing. We literally did the same thing. We found the smartest people in the world and said, come with us. Now, whether that was moral or not is to be questioned, but, you know, it gave us an edge, didn't it? It changed your life. I know that. I'm long calls into the bell. I've got some 0 dates, and I've got some call spreads for tomorrow. I have not closed either. I want you to know. I'm already long, so I'm still long. I still haven't sold. We're in the green zone, so I'm a buyer here. That's all I can tell you guys. I am long and strong into tomorrow, so. Oh, dude, like go down the rabbit hole in the Zumwalt. It was a disaster. It was a disaster. Like military industrial complex wanted all of the maintenance to be done by them and not sailors. Shit broke everywhere. Like there's more than that. Like if you go down the rabbit hole in that shit, it's horrifying. The number of ships we could build, the number of yards we have. If you go to the Navy, they'll tell you that we don't even have the workers skilled enough to produce them in mass. They're literally retiring. In the next like 10 or 20 years, we won't even be able to build a destroyer. Seriously. We literally need like boatyard workers from other countries here like right now. Bring your families here and teach our children how to do this. I shit you not. And that's for this. And you're a Republican. Security of our country. We need that. We don't even have the knowledge anymore. It's disappearing. Like it's literally disappearing in our country. The ethics and ethos and culture and second, third generation shipbuilders. It's gone. It's gone. We literally got rid of it over greed over the past 40 years. That's what's happened. We sold out for cheaper and more profit. pretty bad. What do you guys think about tomorrow? You guys think unemployment and NFP is going to be bad? You guys long or short into NFP? You guys think that's what the war hasn't crashed it? The war hasn't crashed the market yet. What else? Shortages hasn't crashed the market yet. The election hasn't crashed the market yet. The Civil War hasn't crashed the market yet. Russia threatening Ukraine hasn't crashed the market yet. You guys think it's NFP and PCE? Or not PCE, unemployment? Is that the one that does it in? Just another way to intraday sell down. You know what I would be scared of if we were at the top at the red? I'd be scared of selling tomorrow. Where we are right now, I'm not scared of selling tomorrow. This is a prime place for a buyer. I would rather be in the green than the red going into those reports. I don't mean green. I mean green here and red above. All week long with the pin. No new lows all week long. Everybody must be long for this, huh? These dealers are like, God damn it, the gig is up. They're like, we have stopped the entire week from moving higher. I hope I get paid here. I did this last week and make bank on Friday. I had a bunch of call spreads and they just printed at like 345. I got some zero dates today and I got some call spreads expiring tomorrow. I bought a low again for the second week in a row. Let's see if we get paid. See if we can make it 2 for 2. Imagine being like 78 right now heading into PCE. You'd be selling the fuck out of PCE. Or not PCE. I keep saying PCE. Somebody said it to me this morning, like you said PCE. So I've been using it all day long in place of NFP and unemployment. $349. I'm going to put the MOC on for you.
So market on close imbalance, the S&P 500, 308 million to the buy side, NASDAQ 100, 6.3 million to the sell side, Dow 30, 100 million to the buy side.
SPOO's trading 67.54.
75 million to the buy side.
They just keep buying every day, huh? I was told they were selling. High tick on 30 minutes trigger at 367.56. I am long into tomorrow if you want to know. I've got some zero dates on today, trying to pay for the trade tomorrow very cheaply. And I also have call spreads for tomorrow on the market. I was hoping to get the trade paid. Oh, that trade was actually made a little bit of money yesterday. Made a little bit of money today, but I stayed in it. So I want to print. So we'll stay into it until it prints. We haven't seen any new lows. I want to show you that too. There have been no new lows. Let me see here. There was a new low. Nope. Nope. Was there? Nope. No new lows. No new Thursday low. So we're still going higher. Oh, you guys want to see it? Still no new lows. Bears. Did you get a new low? Nope, you didn't get the low. It's right there. That's the Wednesday low. Right there.
According to a source, the US does not believe Israel has decided on how to respond to Iran, including whether
here's the Thursday low right here above. The way is still higher as of right now. God, Bears still can't get it done. God. Can't get it done. Just buying dips. Every time there's a dip, buy the dip. Series of higher lows on an intraday basis, in a weekly basis. Doom everywhere, market grinding higher. Buy every dip. Buy every dip. No series of new lows on an intraday basis on the week. Your lowest low is still higher than the day before. All this doom, all this drama, all this kicking and screaming. Higher, higher, higher. Weakest time of the year. Telling you they've sold out. Telling you to go to cash. Telling you they're not in the market, yet price goes higher. Well, a lot of it sounds like my dad. He used to threaten me all the time when I was young. A lot of threats. We're not in the market. We don't know what you're talking about. Yet the price of stock continues to go higher. Yeah, I want TLT bad. I got TLT down here. I want to buy it like right down here. Not quite there yet. Trading on 96.82. Whoa. What you doing, spy? Wrong way. SPOO's trading 567.50. Series of new lows all week long. Just waiting to trade 578 and 580. My favorite part is if we squeeze up with like a 3-day move, it's going to be insane. Let me show you guys something really cool here. You know what could be a lot of fun if it happens? That'd be a lot of fun, wouldn't it? Party time, huh? Like that one right there would be nice too, wouldn't it? This would be a blast, wouldn't it? Just like sneak it up, whoop, Wake up tomorrow up fucking 2%. Blast that bad boy up there. Jim is crazy. We're not going up, bro. We're all short. Okay. You're all short, I bet. Billions in inflows the past 2 weeks. Literally, last week inflows are insane. In like 3 weeks, they're going to tell you a news article that those last 4 or 5 net sell weeks, that they were actually buyers. 567.74 right now. $567.70 right now. You're gonna wake up one of these days, your face ripped off. Gap it up like 2-3%. Like 3 fucking days of gap up. 3-bar trade on SPOOs. 567.89 right now. I wish we were higher at 1:30 this afternoon. That didn't happen. Then they faked you out to the downside at 1 o'clock. Tricky. 568 on SPY. You can go higher. You can go all the way up there. You can go higher. Two minutes left and another 15 minutes left after that. Hourly trigger 568.16. Keep going. Keep going higher, please. Much higher. Keep going higher, please. Keep going higher. Now trading 568.18. We're crashing this afternoon. Keep pushing it. You don't have. You can do it later, but you're going up there. We already know it. Going up there. You're not done, bro. So much drama. We are gapping up overnight, just so you know, if you don't know already. You got 15 minutes left to know that. We're going to gap up in the overnight. If not before 4:15, we'll start gapping. Expectation for tomorrow, same as yesterday. Nothing has changed. 578, 580. Call their bluffs the entire way. Nothing has changed. I'm going to leave you with something here, okay? I got to leave you with something that's very important before we close this day out with you. Do you remember that vol curve? You only get so many chances to be a bear. They can murder that vol, and they can not move price, but between now and Monday, you don't get to sit at the batter's box for every day for a month. There's too much risk now for a bear. There is the probability of a like 3-day 4 or 5% move is getting stronger. And I need to warn you of that as a bear. You might wake up in the next 2-3 days sessions. If you don't get a battle report, or you don't get some doom from some existential geopolitical doom, that vol curve is going to fuck you. So the tide is turning, right? Well, earlier in the week, we came into the early part of the week, and it's like, Bears have a window of opportunity here. And I'm telling you what, if you're a seller, be very careful. You need something. If you don't get it, you're talking like a 3 or 4 bar trade with like 4 or 5%, possibly 3% to the upside. You're going to wake up to it. I'm telling you. This does not look good for bears. You need a hero. I'll say to you right now. Long and strong into tomorrow, and I will see you then. We'll wrap up the week. Bears, you need something, man. I don't know what you're going to do. You need like Jamie Dimon to like go down to the basement and start like selling everything or something. This does not look good for a bear. I took profit last Friday for, come over here. Who is that? Abyss? Abyss, come here. I sat in this fucking stream, right? Listen to me closely. Come close in the stream right here. Come here. I made $20,000 for being bullish all last week on spreads that I traded with you in this fucking stream. And I'm gonna make another $20,000 tomorrow too. And if you want to see it, right? You can fly to Detroit and I'll buy you a fucking bottle of Louis Trey and we can have it together on my dime and I'll laugh in your fucking face. What do you think of that? Bro. We can do it again. I can show you every week. Every single week I can play it for you. A BS, whoever the fuck you are. Fuck you. Every week I fuck you. Get out of here. Go play in traffic. And I'm bullish all this week too. So pay me my money tomorrow so your shorts burn as we continue higher all week long. With a series of lows that I posted for you on Tuesday on Twitter. And I said to you, as long as you get the series of lows and you buy them, we're going to keep printing, bro. And I'll see you tomorrow when your shit's on fire. Again for a second week. Later, brothers. These